I love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, guys. Welcome back to another live stream. Hope you guys can see and hear me okay. I'm actually punching in a trade right now. You know, this is like the busiest, one of the busiest holiday, I guess, seasons of trading that I've had in a while. Yesterday's Fed meeting caused a lot of volatility. In fact, a massive spike in volatility. Take a look at the VIX. I mean, down 26% this morning. There's volatility on the volatility index. That's how volatile it is. Anyways, took some positions yesterday, did a lot of stuff yesterday. Yesterday was a very busy day for me. And I can happily say that I have a pretty green December starting here. Although the market itself is very red, I was able to pull out some pretty good profits yesterday in the markets. And maybe the biggest thing that I profited from, quote unquote, yesterday was simply not being super heavily invested in something that I thought was a little bit overbought. I put out a post. By the way, members who are in the VIP Discord, I just put out a fresh Forex trade that I was watching overnight, and it set up this morning. So I am back in a trade. So if you're in the Discord, pull up the Forex Trades channel and you'll be able to see the trade that I just took there. Got a couple Forex trades going. I bought the NAS yesterday. Now, I should add some context to this. So I bought the NAS yesterday with kind of a starter position. I didn't go all in the NAS. I'm not fully invested, today. But I did buy the NAS yesterday. I liked the setup quite a bit. Right as we closed down the live stream, price was like right around here. So I literally jumped off, took that trade and put that in the Discord. So I am long NAS. And, this is a first initial try for me on the NAS. And the reason I was so, kind of, I guess, just glad with yesterday's stuff. Yesterday was a tough day in the markets for a lot of people. So I'm not saying like, oh, I'm glad that everybody got, beat up yesterday. A lot of people made a lot of money, but probably a lot more people lost a lot of money. If we take a look at like yesterday's action in individual stocks, a lot of retail stocks. I played around with this list yesterday. Affirm, Robinhood, Celsius Holdings, Tesla, Coinbase, MicroStrategy, SoFi, Reddit, PayPal, Palantir. These are like really fun, retail named stocks. And I don't say that to like, they're not all bad companies. It's just that these ones are like really exciting. Everybody in retail world talks about them. So my perspective here is a lot of people got really crushed yesterday. Yesterday was an ugly day. And for people who were like, buying calls aggressively into this rally, thinking the Fed was going to give them a great cup of tea. It does, I'm not going to lie, feel pretty good to just feel a little bit vindicated about my idea recently about being cautious on the Nas. That being said, I may still be early to this pullback. Like this pullback may do one of these guys. We may go test 20,500. We may go test 20,000. And I'll tell you what, I would not mind it at all. I'll tell you why. So trading is much more complicated than it seems at first. At first, it seems like you just mark. Like if you look at my chart, trading looks easy. Like if you look at my chart, you're like, wow, all you're doing is marking key levels, buying at support in an uptrend. Trading is easy. Well, no, it's not. And yesterday might have been a wake-up call for a lot of people because yesterday was violent for many markets. If you're watching gold, which is bouncing back a little bit today. If you're watching silver, oh my gosh, for the stock traders out there, like I said, yesterday might have been a bloodbath for a lot of people. So trading is not easy. And here's another reason why it's not easy. Risk management is not as simple as, for me personally, and I don't, you do your thing. Risk management for me is not as simple as, oh, I just risk 1% per trade, because I don't trade on a Forex broker. Like the majority of my trading is done in a stock brokerage account. And so what I do is I do a good mix of options trading. I buy and sell ETFs. So I'm doing a lot of stuff in there. I'm trading commodities, indices. I have things that I hold longer term. I have shorter term trades. So risk management is a fine-tuned thing for me. It's a thing that I'm constantly improving and working on. So when I say I wouldn't mind if the Nas rolls over and continues, yes, I would stop out, but my position sizing is not perfectly static. I know some traders are like 1% risk every single time, 1% risk every single time, 1% risk, and that's cool, but that's not what I do. And I'm not saying you have to do what I do or anything. Like this is just what I do. I like to, okay, this is my first setup. I'm going to put a, let's say 1/3 of my full size on this trade, right? So, whatever that means for you. Maybe if you're trading like I do, the Qs, right? I trade QQQ. So here's my long position. I'm going to risk like 1/3 of my max potential risk on this trade. And then maybe if there's another setup that I like more, by the way, the one downside to ETFs is that when the market is closed, there's like gaps because of it. But I like trading on a stock brokerage because I can do option stuff and ETFs, which are very specific sometimes. Anyways, I'm long the Nas. Long story short, I've got a long position here. I wouldn't mind if it pulls back because I can get a slightly bigger second attempt and then a slightly bigger third attempt, right? So I don't mind if this first attempt doesn't work out. If this first attempt works, excellent. I'll make some money. I'll move on. And great. Now, I also should also mention that this is not a hard take profit level for me. I like to trail stops. What I'd be looking for would be if we see some sort of Santa Claus rally, if we see some sort of big rally through the highs here, I'll be looking to take this stop loss and ratchet it into profit upon breaking through those highs. That's how I'm going to manage the Nas trade. If it rolls over, stops me out, cut the trade, look for a better entry. Russell's up 1% here this morning. Russell got absolutely hammered yesterday. A lot of small stuff did. Interest rate sensitive stuff really got hammered, like gold. S&P's up 0.86%, Nas up 1%, Dow Jones up 0.65%. Man, the Dow Jones is just taking it on the chin these days. My goodness. And that doesn't mean that it can't bounce back and have a good return, but the NASDAQ, here's the thing about the Dow. The Dow was getting beat up before yesterday. And then yesterday happened and the Dow got just as beat up as everything else. Like, I think the Nas got beat up the most yesterday. I take that back. The Russell is the biggest loser in all of this recently. The Russell index, which is small cap companies, small sized, basically publicly traded companies, they were down 5% from the highs already, right? 5-6% from the highs. They were already down. Then yesterday, they went down another 5%. So the Russell actually got smacked yesterday, bouncing back here a little bit, but the NASDAQ was also a big loser yesterday. But that being said, it had major gains to give back. So the biggest loser, in my opinion, was the Russell. Second biggest loser, the Dow Jones. Dow Jones has been getting beat up, specifically due to our good friend, well, maybe you don't want to be friends with UNH, but United Health Group, been getting taken out back and beaten up. This stock has really taken a tumble. So here's the thing. The Dow is the lagging of the major three. The Russell is the lagging if you include it into the mix. That doesn't mean those aren't good buys. For me personally, I just like the NASDAQ because, look, the playbook for me in 2023 and a lot of 2024 was, and I'm going back to this trade, if interest rates are going to stay higher for longer, which companies do I like? The companies that I like are the companies that don't need rate cuts to do well. The Russell needs rate cuts to do well. The Dow Jones, a lot of those companies are really rate sensitive too, and sensitive to Donald Trump, right, with the whole healthcare stuff. So that makes me a little bit nervous, right, with those picks. That being said, I am still picking some sectors that I think are a little overdone. I actually think the healthcare world is a little overdone to the downside. I sold puts on XLV. Essentially, I am bullish on XLV, healthcare stocks. By the way, guys, we got just a few minutes. Let me not mess this one up in terms of forgetting the news is coming out. So we got two key figures coming out. We have final GDP numbers this morning, and we have unemployment claims. Both of these are pretty key. Could move the markets one way or the other. And I'm not going to lie, volatility from yesterday could spill over into today. So let's be really careful. Let's give some respect to this news because I don't know if you guys remember the August 5th stuff, like little economic data triggered massive moves because the market was so on edge. So it is very possible that you get some volatility here in the coming minutes. Like I said, I've got a game plan. If NAS tanks through the lows, I'll look for better entries to buy again. Gold, we'll see. I've got a GDX position. So what do we got? We got 2 minutes to go here before we get the numbers. I'll react to them here. Don't go anywhere after the spike. We're going to talk about what they actually mean, what the numbers, what the economic data actually suggests about the markets. And then I'll talk about my other positions. I've got a bunch of trades on right now. And we'll see how it goes. I got about 1.5 minutes to go here. What I've done on the screen for you is I've put up here stock stuff. So if you're an index person, indices are over here. Gold, silver up here, dollar, and oil. So you got a bit of everything just to see where it's at. Dollar index had a major jump yesterday, really strong for the dollar. Gold did not like that. You can see right at the same time, gold dropped hard. I have a position on GDX. It's a gold mining company basket. So it's a basket of gold mining companies, which definitely did not like yesterday either. I think it was down like 2% or something, but bounced back a little bit here this morning. We'll see if that can catch any strength going into the rest of this week. And then I want to talk more about my NAS trade, why specifically NAS and why at this moment I chose to take a buy position. So about 30 seconds to go here, guys. We get GDP numbers, final GDP numbers, which are pretty key. And we also get the unemployment claims. So stay tuned. We'll be right back after this breaking news. All right. About 10 seconds to go. Let's see if we get any movement off of this time around GDP, unemployment claims. All right, numbers should be coming out any second now. All right, final GDP came in better than expected, 3.1%. And unemployment claims came in low. So this, I would say, is a non-threatening number. 220,000 jobs doesn't suggest that the labor market is too hot, nor does it suggest the labor market is too cold. So that's a good number. Stock's probably going to like that on that front. GDP, though, wow. GDP numbers coming in 3.1% compared to forecast at 2.8. See, here's the thing. I love this. This actually makes me pretty bullish on the markets again. I'll tell you why. GDP growth is solid. And yes, there are rate sensitive parts of the market that will not love this because this is suggesting the economy is already in a good place. We don't need to cut rates. And so is this, right? This is not really suggesting anything. So that is a higher for longer print this morning. Now we'll see how the stock market itself reacts to that, because the stock market, the stock market wants to see rate cuts, but they also want to see a strong economy. So we see a flat reaction. That makes sense to me. Flat reaction in stocks, a negative reaction in gold and silver. That also makes sense. These are good prints. Why would you buy gold if the economy looks really strong? I'm not saying that's what I think. I'm saying that may be the reaction is, what's the need to buy gold aggressively if the economy looks strong and the Fed's not going to cut rates? Those two things are anti-gold movements. The story for gold has really weakened in the last few months, really. After the election, some of that uncertainty surrounding the gold story, right? This uncertainty of who the president's going to be and what's going on in the Middle East and the Fed's going to cut rates, all that has changed. A lot of that story has changed. And in fact, it kind of supports, in my opinion, lower prices in gold. Now you might say, well, Nick, didn't you just say you have a bullish position on gold? I do, kind of. I'll show it to you. Give me 1 second. It's an options trade, and I'll explain it really simply, even if you're not an options trader, so it hopefully still, makes sense. I do a lot of options trading. It's kind of my favorite thing. Not really. It's one of two things that I do. I trade a momentum trading strategy as well as an options trading strategy. So let's do this. I'm going to pull it up here. Okay, there it goes. So I sold puts on GDX. This is a gold miners ETF, and it travels pretty much with gold. It moves in the same kind of way that gold does. Price action is pretty similar. Yesterday got pretty smacked. Today, bouncing a little bit. So, here's my thought on this one. You might say, well, Nick, didn't you just say it kind of looks bearish for gold? Yes, in the short term. But in the longer term, I still very much like the idea of having some gold correlated or gold itself positioning in my portfolio. So GDX fills that role in a way. GDX has been getting beat up here for a while. Gold miners can, they're very volatile. They move more than gold itself in terms of percentage basis most of the time. We're talking about a pullback here, 22% pullback in GDX. Meanwhile, I think gold is down, like 10% from the highs or 8%, something like that. So my position's not looking great, but this is more of a dollar cost averaging approach. So what would this mean? Well, this would mean that I sold puts. That means I could get assigned at any time at $35 per share. I'd have to buy the shares right here. And if the market goes lower, then I'm in the shares, right? I have to own the shares. But from a longer term perspective, I don't mind holding some GDX. In fact, if it goes lower, I might get a chance to buy some more at better prices. But that's a different strategy than what I talk about on YouTube oftentimes, which is like my momentum strategy. So had this broken out, I was looking for possible bullish setups like breaks and retests and tight stop losses. I use two strategies and I talk about it often. So I sell puts, sell cash secured puts, covered calls. I do a variation of the wheel strategy for those familiar in the options world. And then I do my momentum kind of break and retest trailing stop approach as well. Why do I do both? Well, the reason I do both is the meshing of those two strategies produces a much smoother equity curve return. So here's the thing. I use a strategy that is not super directional, my option selling strategy, and I use a very directional strategy. When I say directional, my setup on the NAS is directional. Here's the thing. Directional trading, in my opinion, is harder. Dollar cost averaging, options selling, dividend collecting, positive swap from Forex pairs. These are strategies that are a little more directional neutral, and you can still make money. Directional strategies where you're putting this is a directional example. When you take a trade and you say, I think it's going up, I'm putting a stop here, putting a target here, you are making a lot of guesses about what the market's going to do. And I do that, but I do it cautiously and I do it sparingly. I only find the best possible trading setups that I can find because I know directional trading is harder, in my opinion. So I have a directional strategy and I have a direction agnostic kind of strategy, which is like dollar cost averaging. When you're dollar cost averaging, you don't necessarily need to be right immediately. When you put a stop loss trade, you have to be right immediately. So I have strategies that incorporate both, right? I have a dollar cost averaging, AKA no stops, but very tiny positions approach, which some people love, some people hate. Do your thing, I don't care. And then I also have the traditional kind of momentum, put a stop in the trade, trail that stop, let it run strategy. This produces large but inconsistent gains. The other one produces small but consistent gains. Does that make sense? If that makes sense, the directional, non-directional stuff, type yes in the chat. I'm just curious. I want to just make sure that resonates with people as I go through these concepts. And, again, I have two primary trading strategies. One is very directional. One is kind of directionally agnostic, which I love. One of my favorite things about being sometimes directionally agnostic. And if you guys are familiar with Chris Pulver on the show, he's very directionally agnostic. He is very directionally agnostic. He has hedges in place. He has trades aimed in both directions. He's collecting positive credits from the options market, which is another reason I love the options market. There's so much stuff you can do in the markets. If you are frustrated by super specific timing entries, I would encourage you to, honestly, I know this is a sales pitch, but you should join Chris Pulver's group and you should learn from him because I've learned from him a lot. Directionally agnostic stuff is cool. I have a mix of both in my portfolio. Now, I say agnostic. I do have a direction in mind. I just don't, what I mean, I guess timing agnostic is a better phrase. There are timing specific, very important timing is everything strategies. And there are strategies where timing doesn't really matter. Anyways, and the reason I mention that is because timing is the hardest thing in trading, right? Timing is so difficult for a lot of traders. Anyways, NAS position is on. I am in this trade. I had some Forex trades trigger last night as well, or this morning. They set up last night and I got to them this morning. So yeah, we'll see. Let's take a quick look at gold. I know a lot of people are curious about that too. There's a bounce back in gold here happening today, but you can see it is kind of weak out there. Bit of a bounce back, but what we're seeing here is that close below support yesterday. Question now becomes, is this just going to kind of fade and continue lower. I mean, it would not surprise me if we go test 2560. And I would expect we go down here. I would think it would be bounce. Sorry if I lagged there for a second, guys. I am still operating off of my hotspot because my Starlink is still en route. Hopefully you can see and hear me okay. But yeah, so gold here, if it does come down and test those lows, I wouldn't be surprised if we do see a bounce there. That being said, if it fails out, next stop would be not until like 2470. So yeah, gold is interesting. I mean, this is not the same gold that we saw a couple months ago. It's not the same gold price action where every dip was short-lived and buyers were stepping in, right? It's not that same market. And you have to kind of acknowledge that and say, look, gold is not easy peasy one way right now. It is very much ranging. So if you want to trade gold right now, you got to accept there's a good chance it's just going to range on you. It's a good chance that for now, it's going to go back and forth. Especially into the new year, because we don't really have a whole lot left, guys. I mean, we have PCE on Friday. We had today's final GDP numbers, but my guess is volatility is just going to collapse because the market people are going to start stepping away for the holidays. And that brings me back to why I have a short-term trade on the NAS. Now, when I say short-term, for me, short-term is not the same. I'm not scalping it. For me, short-term could be anywhere from a couple days to a couple weeks. That's still short-term for me. I guess short-term swing trading. But I took this entry yesterday, came all the way down to this level. And my thought process was, look, we may or may not get a Santa Claus rally, but history would suggest most likely you do get some sort of positive period during the week of Christmas, before and after around that time. So that's a right by itself positive catalyst. We also see that apparent in our scoring, which, by the way, Edgefinder was producing a bullish reading for NASDAQ when I took the trade, but the trend filter has quickly lost us 3 points on the NAS, which takes us down to just neutral. That being said, if we do get a pop pretty quick, this trend could flip back bullish pretty quickly. I took this trade when it was already bullish, so I'm gonna wait and see what happens with the trade. That being said, seasonality is a big positive here. So I'll show you this really quick. Seasonality. Let's see. And if you're wondering why yesterday I was so cautious on the indices, and yet today I am long the NASDAQ, I do want to address that, because what I said specifically yesterday was yesterday and the last few weeks, the market felt really overextended and due for a pullback to go test some levels of support. The first major level of support that I've been watching did get hit. This level here, 21,150 on the NASDAQ. It hit my level yesterday. So I said that hit really fast. I did not expect such a violent drop in one day, but I picked up a position long the NASDAQ. I indicated that I've been bullish the NASDAQ, just cautious with this one directional no pullback move. And I'm really, really glad that I waited for that. I missed out on a lot of losses. Had I been chasing, had I been buying individual high risk stocks, that was probably an ugly day for a lot of people. Yesterday was a losing day for me, but not like it was not a big red day. I think I was down 0.4% today or yesterday. Given the NASDAQ was down 4%, I felt pretty happy that I didn't partake in all that. And I also know that, there's people yesterday who probably got crushed. So I'm not saying that to spite you, or because let me be completely fair. When the market was going up every day by 1% plus, and I was barely positive on the day or slightly negative, that didn't feel good either. So it just felt good yesterday to finally, okay, I've been missing out on all the upside. At least I missed out on some of the downside. That being said, I'm in the NAS with an initial position, not a huge position. This is a small, relatively sized trade in terms of risk. I would be more willing to get a bigger position going in the NAS if we go down to more key levels that I like. Yeah, no, yesterday was a bloodbath. If you lost money yesterday, trust me, the vast majority of us did. I lost money yesterday because a lot of my option selling stuff went red. I didn't lose a lot of money yesterday, but I was down yesterday. So, I mean, I'm not making fun or bragging too much, or not trying to. I've just mentioned that I had missed out a lot of the upside. I'm glad I at least missed out on some of the downside too. So seasonality is what I was trying to get to with the NAS. Seasonality is historically very positive in the month of December. That being said, we've already had a really positive December. So, take it for maybe we already pulled forward the Santa Claus rally this year. But this year has been such an exceptional return year for the NASDAQ and for the S&P 500. I would not be surprised if there's a lot of people who just don't want to sell their positions for tax purposes in the United States. If you sell a stock right now and it is in a taxable brokerage account, you have to pay taxes on that come tax season. If you wait until January, then you push off those taxes by a whole nother year, right? If you realize capital gains, again, not a tax professional, but there's a lot of people who are purposefully waiting to sell their positions until January. So right now, to me, that leaves a 10 plus day move where I think most likely we see upside in the short run. And if I'm wrong about that, like I said, no worries. I will take a loss happily. By the way, this seasonality indicator is one of my favorite things. I've used it for years. It's helped me catch some of the biggest trades. Last year, I made a massive return with the help of seasonality in the month of November. This year, I did as well. This seasonality stuff right here has been game changer to find which assets I like the most during the fourth quarter period. And although it does not work every year perfectly, nothing does. Seasonality is one of my favorite indicators. It's one of our indicators that we have on the Edge Finder. If you'd like to try the Edge Finder, we are going to drop a link here in the chat as we speak to apply for an Edge Finder trial. If you want to try out our software, we do offer 30 days access to the Edge Finder. You can play around with our seasonality data, our sentiment tools like the put-call ratio, investor sentiment surveys, retail sentiment, retail positioning, COT data history, economic data. We have built so many charts. We've got a full-time team of people behind the scenes that make this tool what it is, and a support staff that is ready to help you. So if you're interested in getting access to the tools that I use and thousands of other traders all over the world, get the Edge Finder, try it out first. We'll drop the link here in the chat. If you guys could, James or Chandler, one of you guys drop the link to that for people to apply for an Edge Finder trial. That'd be awesome. And Nick, why doesn't anyone talk about taxes? Because you got to be kind of licensed to do that. I can't give you tax advice. I also am just not that knowledgeable about it. I have an accountant for a reason. Chandler, James, if one of you guys could drop that link. I'm not sure if it's working or not. If it is not, I guess I can drop it too. But for those who would like an Edge Finder trial, we're doing 30 days access to the tool. Like I said, you can also, if the link is not showing up in YouTube, you can go to a1trading.com, click trials, and you can apply for an Edge Finder trial or a stock bot trial. There you go. Thank you guys. Appreciate that. Yeah, so try the Edge Finder. Use that link right there. It's just been dropped in the chat, or you can go to a1trading.com/trials, fill that form out, and we will get back to you as soon as we can. We have 3 people on our support staff who set up people with trials. So there you go. Okay, guys, we're going to take a quick break, and then we got Miko and Marco joining us for Technical Thursday. Stay tuned.
Shopping for presents this holiday season can be stressful. What to get for mom, what to get for dad, grandma, your uncle. It's all just too much. Lucky for you, A1 Trading has the perfect product for everyone on your list. Introducing the A1 Stock Box. Let mom keep up with all her favorite brands like Lululemon. Dad can keep up with his reading by checking out the latest headlines. And everyone knows Grandma loves hedge funds. She can keep up with what her favorite hedge funds are buying and selling each quarter, and even see what percentage of their portfolios are diverted into what stocks. There's something for everyone in the A1 Stock Box, available now at a1trading.com.
All right, we're back. Technical Thursdays. Marco, Miko, how are you guys doing?
What's up?
Oh,
Good to
where
have
are
you
you?
guys back. I am actually at my house. We're working from home for the rest of December, just during the holidays, which is kind of cool. And I moved into a house with my wife a couple weeks back, still unpacking. So, if you looked around, you'd see a bunch of boxes everywhere. But yeah, I'm in the home office behind me. I have no books. I'm not a true guru I need like my like millionaire mindset books lying in the
100%.
halls, but not yet. I'm still working on it. I'm still learning how to be a guru. Anyways, thank you guys for coming back on. You guys are here every week, and everybody who watches the show regularly always looks forward to these. We get a lot of people who are always excited to get some technical charts going with you guys. So, speaking of technical charts, no shortage of it. Yesterday was a massive Fed day. Really threw some cold water on everybody because basically Powell signaled that the Fed is likely going to kind of pause rate cuts. He didn't say that exactly, but that's how the market heard it. They said, we're pausing. We don't, inflation's not really, our inflation projections are all over the place. We're going to wait and see. That being said, from a technicals perspective, it created some really big moves. Dollar index was up massively yesterday. I'm curious what you guys are watching. So, Marco, what's top of mind for you? What are you looking at today?
Yeah, so for me, I was looking at the JPY pairs actually. So I'm still looking at EJ. We had a little bit of a drop and then a quick bounce, some really nice bullish momentum right here, and I'm looking for buy setups right now. So I'm looking for a nice clean flag to form right here, and then I would look for buys. Same thing on the Aussie and the JPY, but we started to kind of break the highs and retrace. So we started to slow down a little bit, and the momentum is not following. Also, NJ, at this point, it was looking great, but now it's starting to slow down as well, which is not the best situation. So for me, it's EJ today, and the dollar pairs, they have made a move on the Fed interest rate decision, but looks like we cannot get any follow through. I wanted to see a big drop. I wanted to see price actually follow through with this massive bearish momentum. That would have fit my plan. It didn't happen, could happen, but I don't think it's going to happen this week. So for me today, kind of only EJ buys that is on the radar.
Okay. Yeah, I was going to say the yen pairs just went crazy. I must have missed something. There must have been some kind of news or something.
There was the BOJ
Interest rates.
yeah, interest rate.
Did they hike or did they not?
The
Let's see. Press conference. I'm going to just assume that
It was the same.
dovish.
Yeah, I think it was the same.
Yes, they didn't cut, and they may have signaled that they just don't. The people have been trying to call that the Bank of Japan is going to hike rates or signal that they're going to hike rates. So that lack of rate hikes is probably what caused the yen to weaken here. I know yen pairs, Miko, have been on your watch list. I too have actually. I just picked up a short position on Aussie yen, which we'll see if that works out. But I'm curious: are you still bearish on yen pairs? Are you trailed out of anything? What are you thinking with yen pairs?
Yeah, so I've been very bearish with the yen, looking for more shorts. I've had a CAD yen short position for probably about 3 weeks, but I have just exited that position today.
Okay.
I was looking to see if this move to the upside was just a correction for price to continue falling. And that was my impression for literally up until this morning, really. And then after this candle, and I've looked across the board at other yen pairs, looked at the JPY basket as well, and it does look like yen could be turning around. So I have closed this position, and I will be looking to see maybe if there are some opportunities to short, because I still think this is a nice place for some downside. But in terms of the bigger move, which I've been looking for on the yen pairs, which is a pretty big drop on the higher time frames back to swing lows down here, that may be on pause now. So if we do see momentum continue, especially go and break through some highs over here for CAD Yen, let me do that again. So we break some highs here. That would definitely make me more bullish, possibly talking about a push back to the highs there, but we'll get to that when that happens. So yeah, I have exited that yen position. I'm no longer actively looking to short the yen pairs. In fact, with dollar yen breaking the high, which we got today as well, just about pinching the high there, I think there's a greater chance that dollar yen's probably going to push back to 161 rather than take a huge swing back down to this low. And of course, taking to consideration at the higher time frames, there is still that uptrend, which is still alive and kicking. There's probably a great chance we do keep pushing back to the high there. So definitely for dollar yen, I would be bullish on this one, looking for buys. Other yen pairs might still need a bit of work before I do start looking to long, but dollar yen, especially with that move taking up the highs, I'm definitely bullish on this one, looking for pullbacks and more upside.
You know what I love about here's one of my, I can self-report on fundamentalists. So with technician traders, right, people who are purely technical like you guys, what I love is that when something when your idea turns around or price action just changes the nature of it, there's no loyalty to, oh, I only short this chart or I only long this chart. Fundamentalists self-reporting right now, I mean, technicals people can do this too, but they can have like this like revenge, it's this anger, but fundamental, it feels more personal because you're like, I fundamentally analyzed this thing to go down and now it's going up. And what I like about technical traders is that if you're really being super technical only, you use that as just a look, it is trending up, it is breaking structure. Now I'm bullish. And I love that because that is not so tied down to one side of things. I would say that for me, I very much am in the middle of the two camps. I use technicals to really, this is why I love technicals, is the red light, green light effect of technicals tells me when it's time to admit I was wrong about a fundamental idea, or at least about the timing of that idea. Like you might say like, oh, I think gold's going up in the next 10 years, but that doesn't help you in the next 3 weeks, right? Gold might go down in the next 3 weeks and still, you might still be right about the next 10 years, but timing and what I love about technicals is that support resistance, key levels of structure, you know, whatever you look at, it can really help you to kind of outline where you need to no longer be trying to force an idea and vice versa. So I really love that. I think that's awesome. Curious to hear you guys' thoughts on dollar pairs as well. We just talked yen pairs. Dollar index, huge move upside yesterday. Again, Fed signaled they're not going to basically, he even admitted they were a little bit cautionary on the tariff stuff, watching the tariff stuff from Donald Trump. They're looking at all sorts of risks that they see to inflation. So dollar index popped massively yesterday. Are you looking at things like euro dollar, pound dollar? We'll go in reverse order this time. Miko, since you're just talking euro dollar, pound dollar, Kiwi dollar, are you looking at any of these? And does anything look like a good setup to you?
I actually like dollar CAD a lot because this one actually had a really big breakout, I think like 4 or 5 weeks ago, of some really powerful weekly resistance. And it looks like we've just kind of continued that, of course, with the news yesterday. So I do think for dollar CAD, if I really zoom out, I think this has still got a bit of a way to go to some really big, significant levels here. So around 1.46, 1.47. So with that big breakout, with all that momentum, with the news yesterday, I think there's a good chance we do see price eventually make its way back to this resistance here. So I'm very bullish on dollar CAD. Some other pairs like euro and pound, they're still kind of at support, so I need them to really break through before I am going to be looking to actively short those. But dollar looks very strong right now. I think there's a good chance of it continuing. And dollar CAD is a really nice pair to look at as well. So a really nice swing there. Some nice areas of support should we get back down there for a retest, some other confluences as well. But I do think dollar CAD's got more upside. And if the dollar stays strong, there's a good chance this one keeps pushing. So out of all the USD pairs, dollar CAD is definitely my favorite.
Okay. Yeah, no, dollar CAD moving like a rocket ship here to the upside. And one quick note on dollar CAD. I believe, I could be wrong, but let me just pull up this. I love looking at this stuff. Sentiment is a fun indicator. And I think I would say sentiment is the bridge between fundamentals and technicals. It's like a good middle ground between the two. Dollar CAD, at least according to our data, we aggregate a couple different brokerages that report this data. Their positioning retail side is super short. And I love seeing that, because when I see like, okay, the crowd is just trying to short this thing over and over. They're like punching the slot machine at the casino, trying to short this thing. And it just keeps going up and up and up. So just thought that was worth mentioning, that sentiment shift, 71% short bias, 29% long bias. So being in the minority in terms of positioning is something I like for sure. So cool stuff, Miko. Marco, what about you? Are you watching any dollar crosses?
Yeah, and since we're talking about sentiment, there's an interesting story. So there's this guy in Croatia who his specialty is market sentiment, and he does a lot of surveys. So he was able to predict the Trump versus Hillary elections, and he was able to predict, I believe, Biden versus, not Biden, but the last elections. He was able to predict that as well. And he has a hedge fund. What he does is he has a huge audience, and he gives out a survey every week on what do people think on the S&P and let's say on some other assets. And basically he gets a reading of what the market sentiment is, executes a setup, I think 1 or 2 trades per week, and he has like a 70% win rate. So it's pretty amazing stuff what he's doing with just market sentiment. And I think he's making around 20% per year with just 2 or 3% drawdown.
That's fantastic. Yeah, no, I love sentiment tools too. And to be honest, maybe we should start our own community polls. That would be awesome. The question is, could you get enough people to spend enough time going through like 20 different charts? That would be cool. Like if you get them to do gold and S&P and NASDAQ and euro and dollar all at the same time, that'd be really cool. But I don't know, maybe the community would be interested in that.
In his case, there is a prize. So it's a competition and you get a prize every quarter. And if you are right the most times, the first 3 people get like, I don't know, 20, 30K, something like that.
Oh, I love that. That's really cool. Awesome.
Yeah, it's pretty cool.
Okay, so in terms of dollar crosses, retail crowd seems really kind of fighting the dollar trend. Are you bullish, bearish? What do you think, Marco? Are you euro dollar, pound dollar? What are you watching?
Yeah, so I'm watching the Aussie and the US dollar.
Okay.
On the daily chart, this thing is just dropping out of the sky. So that's pretty good for me. If I zoom in on the 1 hour, which is the one I look for setups, I was super bearish and definitely looking for sell setups after we had the interest rate decision. We kept melting down, but we just could not commit, and we started to print a lot of bullish pressure right here. So that's a little bit of a warning sign to me. My goal is to wait for the price to break this major low, give me another big red move down, and then I would be looking for sell setups. That would be the confirmation that I need. Until that happens, I shall be more patient. The other big dollar pairs, EU, overall, it is kind of moving down, but again, it just could not commit with this large selling pressure. And the pound US dollar is the worst out of all 3, in my opinion. We had that big move down, but then a big correction as well. So my main focus is going to be on the Aussie and the US dollar in terms of the dollar pairs.
In terms of dollar pairs, I'll also just chime in on one that I'm watching. I'm watching dollar Swiss franc. Curious to see if we can break through these levels here. Big key level of kind of resistance here. So just seeing if we can break through there. I think that if you do get that close above this area, there's a good chance we go and test this previous high. So dollar looking pretty strong across the board, across a lot of different charts, pretty much everything. It's hard to find anything that the dollar is really losing a lot of ground to. Look at the Kiwi dollar, as you mentioned, the Australian dollar. These ones are just getting whacked. And just to toss in a little fundamental spice, China's economy is looking really, really rough. And of course, the New Zealand and Australian economies are very tied to China, as they are major exporters to the Chinese mainland. So here's the Chinese government bond yield. You can see it's dropping off the cliff right now because again, people are just China's just not looking. It's not looking good. Their economy is very manufacturing heavy. They've been going through some really tough times, the real estate bubble, all that sort of stuff all at once. So I don't know, that definitely drags the other currencies down as well. The Australian dollar following suit with that, and also being beaten up by, of course, that really strong hawkish remark yesterday. It was kind of weird. They called it a hawkish cut yesterday, right? So they cut rates, but they signaled that might be the end of it. So that scared people. So I don't know. We will have to see where that goes next. What do you guys think? Let's do metals, gold or silver. Miko, either one. Really big sell down on metals, but especially silver, taking it real hard here, breaking under 30. Is this a longer term buy the dip opportunity, or is the momentum lost here on this chart?
Yeah, it's a pretty big move. I do think with silver, I mean, I'm still very bullish. I'm going to be actively looking for buy positions, but the way I'm looking at it now is that originally I had a kind of an idea that I'm looking for the pullback of this move, and we might see some more upside with that, and I still am. But I'm kind of keeping an eye that we might be seeing a pullback of really the swing here from 2022 as well. So there is that possibility of a much deeper correction. There's a really big level over here around 26. We had a bit of a retest a while ago. I wouldn't be too surprised if we do push down. But looking at the more immediate price action is looking very bearish on the lower time frames. And because we're breaking structure as well, I do think we probably will see more pullbacks and more downside. Gold's not looking too hot as well. I think gold might also see a bit more downside too. And yeah, both of them are kind of in sync with each other. So if that's the case, I do think more downside is likely. Still with gold, I think a nice buy opportunity will come around soon. A really aggressive double top not too long ago. Breaking support yesterday, not a good sign for the buys there. So there's probably a good chance we do end up back at this low. So it looks to me more downside for both of them. I'm getting ready for buys, but I have to be a bit more patient.
Interesting. I'd say we're right in the same camp on that, because I feel short term metals are under pressure. They look bearish, broke some key levels, but then longer term, I mean, long term, I'm always bullish on metals. I think that they have a place in the portfolio at any time, just like nowadays, I would even say a little bit of Bitcoin may have a place in the portfolio, but metals for me definitely do. They're just something that over the long term they print more dollars, but there's only so much actual material on planet Earth. So it's one of those things. But short term, yeah, I mean it's looking rough. Even the bounce back today, fading pretty quickly. We were up 1.5% or so. We're now up 0.5% for gold, and we're back in the red for silver. So tough couple days for the metals. Can't seem to find a bottom on those. Marco, same question to you. Metals, silver or gold, what are you thinking? Are we headed lower? Are we gonna find a bottom?
Yeah, for me, gold is on the daily chart kind of still in no man's land. So we had this V reversal, which is a bullish pattern. We could not follow through, so we could not get an option from there. So my conclusion is we're kind of bouncing around this area. My view is on this low and this high. Until we break out of those levels, I'm just expecting more of this sort of corrective price action. Of course, if the dollar strength continues, so if the DXY continues shooting up, then we will probably see this start dropping. In terms of silver Silver looks a bit worse than gold, a bit more bearish. I think it has moved down a bit more. So I'm a bit more bearish on silver. If I had to give a bias, I would be bearish silver and neutral on gold right now. Again, I'm looking at those key levels. I'm looking at this low and this high. Until that happens, it's kind of the same story we had with Bitcoin a couple of months ago, where we had that huge uptrend and then we were just kind of flat for quite a while.
I gotta say, 2 points on metals. Number one, just when you were doing that, when you pointed out the cross with the dollar, Marco, I mean, gold has gone sideways and the dollar has absolutely ripped higher. So we've got to give some credit to gold here. Gold is holding up pretty good considering the dollar's movement here recently. So really impressive on that front. And then the second rant that I just wanted to ask you guys if you feel the same way. Gold has been really frustrating from a content creator's perspective recently, because every time I pull it up, it's like it's going nowhere. It's just choppy. It's just sideways. But everybody seems to just be obsessed with trading it. Do you guys feel the same, like frustration? Everybody keeps asking about gold, but gold's not doing anything. So it's kind of just like it's just ranging for now.
Yeah, I mean, for a lot of markets that are moving sideways, because I feel like a lot of people, because, well, for me anyway, I'm focusing more on the 4-hour daily charts, whereas a lot of people be like on the 5-minute, and there could be a nice little move there.
Yeah,
so
sure.
people get excited from that point of view. But yeah, I might be a bit more neutral. I try to drop slow time frames to see what they're looking at, but you know, sometimes it's just a chop, it's just messy, and you know your conditions which you perform better on. And I know I'm liking more trending markets, and if a market's not trending, I'll tend to stay away. But hey, some people might focus on choppy markets and love that, so that could be a possibility.
Yeah. Marco, you feel the same way?
Yeah, there are just some weeks when most pairs are not doing anything, and you have a live stream scheduled, and you're like, oh my god, what will I talk about? It's super flat, it's super range, but I'm gonna have to pull something out. So I know the feeling. It's pretty tough, and I don't think there are a lot of opportunities in the market. Yes, you can always find an opportunity, but if you have a specific strategy that you're trading, 90% of the time when you look at the charts, there will be no opportunity for you. So it gets, trading is boring most of the time, right? We're waiting for those couple of days in the year where the markets are super active and conducive for our strategy. But yeah, on the 5-minute, as Miko said, like people are trading the 5-minute, the 1 minute, which is totally crazy. I definitely not recommend doing that. But on the 5-minute, it gets pretty active. It gets pretty fun.
I'm not a hater, but I really find it really difficult to see how you can become super profitable on like the 1 minute and the 5-minute, because spreads and commissions eat up so much of the moves that you're making that it's like you have to be perfect to make money, just to escape the costs of trading costs. They're so high relative to the movements in the market. So I mean, maybe if you're scalping like really major big events where you're getting these huge moves so that the spread still is, you know, very small. But yeah, I mean, it's difficult. Not impossible. Not going to tell anybody they can't make money if they're making money at something, but difficult to say the least. I would say that's probably the hardest way I know to make money, is trying to scalp the 5-minute chart.
Yeah.
Anyways, last question for you guys. Oh yeah, go ahead.
I saw a funny comment. So a tweet from Trump today, how he dislikes Powell will make gold skyrocket.
It totally could. Yeah, we're back on Trump's Twitter watch now.
Yeah, will you be adding like Trump tweets to Edge Finder, like a separate category?
We might have to. My goodness. I mean, that used to move the market so much, and I'm sure it's coming back. Okay, last one, because we've got 2 minutes to go. Let's do Bitcoin. We'll skip indices. I covered them a ton before, so we'll come back to indices, I'm sure, next time. But let's do Bitcoin. Bitcoin, where are we at with this? Is this trend still sustainable for you guys, or do you think this is too static, too back and forth? Miko, you first. What do you think about Bitcoin?
Yeah, not the biggest fan of it, to be honest. I mean, it's still bullish, still seeing higher highs and higher lows, and that's how I dictate a bullish chart. But because we're so corrective, it's not great. And the longer we stay in this kind of corrective behavior, the more likely I think Bitcoin's probably got a big correction on its hands as well. So still bullish for now, and we can pick up momentum for anywhere really with Bitcoin. Sometimes we are corrective and we shoot off, and then we're not So that could be the possibility. But the longer we stay like this, I lose more confidence that we are going to sustain, and then maybe a big correction is more likely. So yeah, still bullish, but keeping a close eye.
Okay, fair enough. Marco, same question. Bitcoin, more upside? What do you think?
Well, today is make it or break it day. What I usually look for is two major bearish candles. The first one has printed yesterday. The current one is looking okay, but if the current one closes like this, then for me it's kind of game over and I'm going to be super bearish. Right now I'm still bullish. So it all depends on how we close today. Two big red candles is a big no-no for me. And at that point I'm going to be jumping ship, or not jumping ship, but being like very bearish.
Yeah, I think if you break and close under like 95, 92,000, somewhere in that range, that starts to look really rough. Then you are no longer in this like perpetual uptrend, and price would have to kind of go find where its support is. I mean, if we do a candle like that quickly, I'm going to look at this chart and say, I don't know where support is unless you're talking about way down here where I initially bought Bitcoin back in the day. I don't have Bitcoin anymore. I traded this thing up through the elections. Unfortunately, got stopped out right there before it made the rest of the move. But my long story short is, if you get like you're pointing out, Marco, like a big failure to hold any of these key support levels, then yeah, I mean, we can V up, we can V down. I mean, we can just
we're done.
Yeah, we have really sharp
game over.
Yeah, it's one of those things. It's a fragile. It's a perpetual uptrend until it's a just complete fallout. So we got to be real careful about Bitcoin for sure. Well, guys, thank you very much for joining me on the show today. As always, you do this every week, so we really appreciate you coming on and helping out on the show. Miko and Marco both have their own YouTube channels. Make sure to go subscribe to them. It's at Marco's Trading Journey and Miko Audu on YouTube. We dropped the link in the live chat for you. You can also just search them up on YouTube at your convenience. Make sure, guys, at home, do us a favor, go subscribe to their channels. Find them on their socials, find them in their Discords, Telegrams, Instagrams, all that good stuff. And let them know you found them from the A1 Trading Show. Guys, thank you very much for coming on and spending some time talking charts with us this morning.
Appreciate it.
Thank you. See you next week.
Guys.
Goodbye.
All right. Always good to have those guys on. Again, very technical traders. And speaking of technical traders, we're going to go back in both directions now. We've got Forex James taking over the show here, who does a good mix of both. I do want to also just mention, if you're somebody who wants a copy of the Edge Finder, we're doing a giveaway for Christmas Day. If you have not joined, that is just 6 days away. My goodness, Christmas is right upon us. 6 days until Christmas. It's like counting down till Christmas Day. If you want to join the giveaway for an Edge Finder copy for free, we are giving away one free copy of the Edge Finder. To enter for a chance to win, we'll drop the link here in the chat so that you can put your name in the hat if you have not already. Or if it's easier for you, just head over to a1trading.com. On our homepage, there's a pop-up that shows up, I believe, in a couple seconds. Let's see if it shows up. Maybe it does. There it is. You can enter the giveaway on the website as well. Just go to a1trading.com, and there's a pop-up that shows up. All right, guys, stay tuned. We got James taking over the show here in just a second. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello, guys. It's good to be here. Good to see you all again. How is everyone doing? Hope you didn't blow any accounts last night. We saw some crazy moves. I also realized I kind of misspoke last night. So I was saying that I wasn't expecting much of a impact on the markets, but obviously we did. And I didn't specify, or I wasn't accounting for certain things, which is obviously my fault. So what we saw obviously was a large move, but in my opinion, this isn't due to the rate cut itself. It was more due to what was said during the statement or the speech. It was more a case of it's more optimistic around the US, which obviously I didn't really account for what was going to be said. I was more looking at what the actual rate cut itself was going to be. So that was my bad. I hope no one lost any money because of what I said. And if you did, then you probably shouldn't be trading anyway. Yes, sure. So I took a euro dollar short, made about $1,000 off that, which was quite nice. I'll move on to something else actually. I was thinking about this morning. I'm currently in euro yen as well. Short positions here. So the initial position is actually, I'll just put the trade history on. Initial position is down here, and I've scaled in again up here as we are approaching the top of this Bollinger Band. Very simple stuff, just very lightly DCAing into this, looking for some more downside, looking for a correction of the move we saw due to the Bank of Japan hold or rate hold. So what I was thinking about this morning, I went to get my hair cut and I was sat in the barbers and I was like, you know what? It's kind of crazy how disconnected we are as traders, really, from the value of money. Because I was thinking $1,000, cool, made like 2 or 3% on my trading account, but it's just a percentage. Whereas I was thinking this morning, $1,000 is a lot of money. I don't think it, regardless of how much money you've got in the bank, $1,000 is still a lot of money. And you kind of lose that feeling eventually when you start trading, especially larger capital. You start to disassociate with the real value of what you're actually getting. So if you're working a normal job, you might be getting $20 an hour. So when you put it into perspective, it's kind of crazy. Obviously, it's not a huge deal. It's just one of those things. One of those things I was thinking about. Shout out my gold shorts, now long. Yeah, your gold shorts worked out. So well done on that one. I've not really checked gold, actually. I was sat in bed eating some fried chicken last night and took that euro dollar short and then left it, came back a couple of minutes after, and the markets moved, so I took profits and that was it. Then I was completely off the charts again. So yeah, gold, nicely done here. Broken out of our, what was it, a 23-day range or something here. Moved to the downside. It looks like we're still continuing down, actually. We're seeing some struggles, having a little bit of a correction to the upside. Although gold actually pretty much has had a full correction. Dollar still moving crazy. The yen's down pretty bad, actually, today. The euro's down. Pound is down. The dollar is continuing its domination over the other G10 currencies. Hello, James. Do you know by any chance when will New York and London central banks close for December? I actually have no idea, to be quite honest. But that's partly why I kind of just stopped trading around this period, because the markets start to slow down. Obviously, we just had a very volatile day yesterday or last night, but generally speaking, the markets aren't too eventful towards the end of the year. What do you think about GJ? I still think we're going to see some yen strength. So obviously we had a hold from the Bank of Japan last night, or this morning, depending on what time zone you're in. But the overall idea that I have is, yes, we had a hold, but in the longer term, it still sounds quite positive. I think we're still going to get that hike. I think we need to have a hike, and the Bank of Japan does seem to agree. It's just they clearly weren't in a rush, and that's what they said. So yeah, I think eventually we're going to start seeing downside. It's just more a case of when. So if you're not currently short, I might start looking to go short at these next highs, sort of around the 199.5 level, roughly. Told you about GBP CAD yesterday. Looks like it's about to play out. Let's see. I'll be honest, I can't remember what you said about pound CAD. Does look quite bullish, however, just from the technicals here. Really nice level of resistance. Moving averages are bullish. Very clean break. Looks like we could be having a retest now. So to be honest, I wouldn't really be opposed to going long somewhere off this level here. Chat, Intel buy, edit Blaze. I have absolutely no idea. Get the stock box. I've got a look on Forex Factory. The information is on there. Right, fair enough. I grabbed a nice AJ short yesterday, more or less from the London Open. Yeah, I'm a little bit salty about the euro. The euro yen position here because I was in relatively good profit at one point. Let me put trade history on here. Yeah, so sold here, market dumped, and then we got the Bank of Japan statement, and the Bank of Japan rate decision, and the market just flew to the upside. So it was a little bit frustrating because this was about 1% profit, give or take. So maybe in hindsight, I should have just banked it, but whatever. It is what it is. Pound Swiss, sure. Looks very similar to pound CAD, really. I mean, pound Swiss, I say it all the time, but it's probably in my top 5 most hated currency pairs because it's very range bound. It's just a very bland market to try and trade. So I suppose you've got 2 ideas going from that. You could either follow the current trend, which is to the upside, or you could try and sell resistance by support and just follow the range. In my opinion, I don't like range trading, so I would more be looking to continue the upside move. And the only way I see that really being possible is either an entry right now, which is a bit aggressive for me, or wait for the break and a retest and then the continuation. In this case, I'd be looking to buy from here, something along these lines here. Australian dollar yen, very bearish, really. I'm assuming we had a move to the upside like we did on the other yen pairs. Yeah. Actually, the H4 does look quite good as we're coming into this double top of the 200 moving average. The RSI isn't quite overbought, but it's getting there. Obviously, if we're taking into account the China situation, obviously the Australian dollar and Chinese economy are very correlated. So often when we see China doing very poorly, we'll see the Australian dollar start to do very poorly in return, which is the case that we're getting here. I mean, look at the sell-off we've seen on the Aussie recently. Obviously, the move to the upside that we're having now is a reaction from the Bank of Japan. So it wouldn't surprise me if we do see some sort of correction back to the downside at some point. When we get that, I don't know. It could take a couple of days, could take a couple of hours, could be next week, could be in a couple of weeks. Really don't know. But overall, I would say this is quite a good market to get into some short positions. I believe we'll have a rise in GJ until 204.8 to 9 level. Yeah, I think we will see some slightly higher prices in yen pairs as we see investors digest the rate hold. But I'm still more than happy to say that the yen longer term is going to be quite bullish, or at least gain some strength into 2025 as we approach the next rate decision. We will likely get a rate hike by the Bank of Japan next. I think it was something like 9 people within the Bank of Japan said that they would be open to rate hikes on the one that we just had if it was proposed. So it clearly wasn't proposed and it just wasn't through. So the fact that they were open to it tells me that it's likely that we're going to get a rate hike next on the next rate decision. Your thoughts on NAS 100? That daily bouncing off trend line, and look at that daily candle. Don't trade trend lines though. Yeah, I'm trading less and less technicals as the days go on. Although actually NAS does look really nice to go long here. This is like my almost perfect setup. We've just bounced off this 200 moving average. The RSI was oversold. We have a large candle here that we very likely will see get corrected. We're in a very strong seasonality period for the indices. So yeah, actually, I think I've missed this really, unfortunately. But yeah, I think upside on NAS overall is fine. However, I think the upside might be a little bit capped now as we are starting to see the rate cutting cycle by the Fed come to an end. AJ? Let's see. Daily this is quite a nice trend line, actually. I didn't even see this. Yeah, it's tricky. This is a really strong support and trend line, but we are still below the 200 moving average on the daily. So for me, I'd be quite happy to say we are eventually going to break down out of this trend line. But yeah, again, it's more a case of when rather than if in my book. Pound Australian. Again, just playing off the Australian dollar weakness, I'd be more than happy to start buying this market, really. I think we're a little bit extended right now, so I'd be more looking towards waiting for the next bottom. So possibly, actually, let's see, fib, low, high. Let's take our level here. So within the 50% retracement level would be kind of where I'd be only interested, or the only place I'd be interested. Stop at the previous low. This gives us a 1 to 2.6. Yeah, I think we're just seeing a natural pullback here. I wouldn't say this is a change of trend or anything. We are still making a higher high and now potentially a higher low. So I think this is possibly a good buy. Where is Miko? You missed Miko. Miko and Marco were on just before me. So if you want to watch their segment, go and rewind it a little bit. Twas a rumor. I have no idea what you're referring to. Check US 30. Okay. Oh, actually, I'm going to show you US 30. I had a buy position on, and I got out, and I think this is probably one of the luckiest trades. I don't use the word luck very often because I don't really like it when it comes to trading. But if we have a look here, I bought it right here because I was saying that I was looking for a possible mean reversion as price came down to the bottom of our Bollinger Band and the RSI was oversold. But I just had a feeling that it wasn't going to work. And I can't tell you why. It's just more intuition. Just didn't like the position. So I closed it for basically break even. And then look what happened afterwards. So it was one of those trades where it was like a little bit annoyed that I didn't really get anything from it. But then, you know, looking back now, it's like, oh, that was actually a bit of a great decision, really. Although if we're speaking about now, I'd be quite happy to say again, we're going to have likely we'll have a correction. I think this market's very overextended now. If we are, if the main drivers for this market are still bearish, which honestly, I have not a clue if they are or not. I'm not really involved in the sort of macro side of things at the moment, but I'd be quite happy to say after the move that we've seen to the downside, which is large, it's been a large sell-off, that we are at least going to have some sort of mean reversion before continuing to the downside. Or this is it, this is the bottom, and now this is a very cheap area to buy. Because don't forget, investors are quite happy to have some low prices to buy into at the start of next year and hold. So yeah, we'll see. But I think, yeah, if you are looking to buy, now is probably a good time to at least see the full correction of the FOMC candle. Oh, it was a rumor for the BOJ hikes. Yeah, I mean, I was saying that it's likely they're going to hold. So it wasn't really a surprise to me. The reaction was a bit of a surprise. I didn't think we'd see such a large sell-off on the yen. Because again, it wasn't really a hidden thing. They basically said it without saying it. So yeah, I'm a little surprised that we did see such a large selling move on the yen. DAX. Yeah, so my idea is still valid here. Again, anyone that watches my segments quite often will know I was talking about going short on the DAX. I haven't done it because I'm not looking to place any new swing trades, especially at this time of the year. But the move that we saw, again, it was heavily driven, well, basically only driven by the earnings releases that we saw with LVMH and other companies. and the Eurozone just isn't in a favorable position. It's not something I see investors wanting to get into at the moment, really. We are also seeing price at the top of this ascending channel. So overall, you know, a bit of a basic outlook, it makes sense to see some lower prices here. So yeah, in hindsight, maybe I could have taken it, but again, just wasn't something I was overly excited about. Dollar yen short, definitely not. I think dollar yen is probably the only yen pair I wouldn't want to go short on right now. So what you've got to account for is, yes, although the yen might be in a position to gain some strength over the next couple of weeks or a couple of months, what about the dollar? And the dollar is doing very, very well. So my next target's on the dollar. We've broken out of 107. We had a very strong candle yesterday. I'm very confident we're going to see 110 coming pretty soon. So I don't want to start selling into that. Ball out. This is on one of the ones we're going to have to disagree on. But yeah, to me, not really a great position. I think, you know, you might see some downside short term as we see again, some sort of correction from the Bank of Japan move, as well as obviously the RSI is a little bit overbought here. So some sort of a very small mean reversion correction would make sense. But I wouldn't really see it lasting too long, especially with the situation with the dollar. Very, very good sentiment around the US economy at the moment, in my book anyway. Just going to see what's on the edge finder. I've not checked the top setups today. Let's have a look. Pound Australian. Oh, actually, that builds in quite nicely with what I was saying earlier about Pound Australian. We could be looking for a nice buy position there. Euro Australian makes sense. Obviously, we're seeing the Australian dollar not do too well at the moment. Dollar CAD, yeah, look to get dollar CAD. Pound New Zealand, not too bothered about. Dollar CAD does seem really good. I'd love to get into dollar CAD. So let's have a look. Here. Yeah, we're seeing a correction here of FOMC. JPY gains net positioning long and COP, but I'm also not sure because of USD. Yeah, Dennis, exactly. I think something is coming for the yen. I think we're now seeing position building by the institutions for some yen strength in the longer term. But again, the dollar in my book is just way too strong to start shorting it. But as always, you know, I could look back in 2 weeks, in a month, in 3 months and say, oh man, maybe I should have been short dollar yen, or, you know, started to short the dollar. But at the moment, I don't really see a reason to. But yeah, dollar CAD looks really strong. The problem is there's just nowhere really to get into. The only place I can see from a technical level is here. And I think this is a little bit too optimistic to think the market's going to drop this much. But this would actually line up quite nicely with this 200 moving average. So we'll see. Again, I'm not really bothered about getting into any positions at the moment. So if I miss it, it's fine. There's always new opportunities, but it would be quite nice. Actually, I wonder if we've got new COT data. Let's see. Last update, December 13th, weekly interval. Okay, not yet. But yeah, the yen is by far taking the lead on the COT. I mean, there's nothing really as overwhelming. Silver's got quite a strong net positioning, so does oil. But yeah, generally speaking, yen short, yen longs are making sense. It'd be interesting as well to see what the dollar does in terms of COT positioning when we get the new release. I'm fairly sure we get the release every Thursday. I think it's sent every Tuesday and it's public by Thursday. I think that's how it works. I could be wrong on that one though. So maybe we'll get a new update tonight or later today. Also, I just seen when I was waiting to come on stream, I've just seen this feature in TradingView. I'm not sure if it's new or not, but I haven't seen it before. But you can see all the positions you've taken on an asset. So when I tell you that I've been very bearish on euro dollar, you can see this was back in, I actually can't see the exact date. I'd say mid-August, started selling. So you can see up to here, and we've gone second page, selling all through here, third page, selling all through here. So I thought that was quite interesting, really. It looks like an absolute mess. Perma-bear euro dollar. But yeah, after last night's results, I think parity is on the table more than it was before. Even before I was saying it's very, very likely. It's more a case of when, not if. I think that still holds up now. So we've managed to break support quite nicely here. Actually, is that drawn properly? I suppose it's a little bit larger, sort of through here. Either way, I think once we fully break this, we're going to really see a melt on euro dollar. There won't be much in terms of structure start inducing much buying, especially on a macro perspective. Dates at top left on the chart. Oh, right. Was it? My bad. Oh, you're right. It was. Okay. So yeah, it was the 5th of August was when I placed the first short position. So let's see what else is going on. We are seeing pullbacks here, which I think is quite nice overall. It does present some nice opportunities to get into some positions. We're seeing dollar NOK pull back, euro pound is pulling back, dollar CAD, euro dollar's pulling back a little bit. So yeah, looks quite good for me. Gold. Yeah, I think my overall perspective on gold is now more leaning towards a bearish side, just because the dollar is doing so well. Now, there's nothing, in my opinion, that is going to drive gold, really. You know, the main drivers we saw this year were rate cuts. We had the elections, US elections. We had a lot of rate cutting going on. And obviously that was all driving inflow into gold. Most of that's done. The Fed has already said they're slowing down the rate cuts. The Bank of Japan is hiking. ECB is still, you know, in a very tough spot. But generally speaking, you know, the elections are done. Things in the Middle East and Russia, Ukraine are still there, but it's not really doing much in terms of escalations. So yeah, I don't really see anything that would start making investors go heavily into gold at this moment. But yeah, that's just my 2 cents. Obviously, you know, super long term. So, you know, 10, 50 years gold, I could easily see continuing to the upside. But immediately for us short-term retail traders, I think, yeah, gold's definitely more on the bearish side, in my opinion. I think we've done dollar Swiss. Did we? I can't remember, to be honest. But yeah, dollar Swiss is a strong buy, in my opinion. Again, dollar dominance. So I would never, at the moment, shorting the dollars, not even something I'm considering doing. So the only option for me here is to start going long. And I actually don't mind where price is right now. We've sort of respected this very minor previous high. Stop loss just below the previous lows. And then just look for a 1 to 2. I think this will be pretty satisfactory, really, in the grand scheme of things. What we've got here that's a little bit of a concern is this 200 weekly moving average. So if we zoom out and just have a look, it's quite well respected within this market. We can see here previously respected very well, acted as dynamic resistance. Same thing back here in this is February 2023. So something to pay attention to, but I wouldn't say it's a huge red flag just yet. Dollar CAD, similar thing. I think we're going to see, likely, we might see the Canadian dollar not do too hot in 2025 due to oil. So I'd be quite happy to target the previous highs. And I've been saying this again for quite a while. We've got a 4-year cycle going on. So this was high, this high was in 2016. This high was in 2020. We're now in 2024, and we're coming up again into this level. So it's every 4 years so far. So obviously since 2016, we are seeing the same thing happen. So maybe shorts could also be an idea, but yeah, again, I'm not looking to sell the dollar right now, so it's not something I'm going to pay too much attention to. Cot says JPY longs, give it 2 days. Maybe. Is there less volatility during Christmas? Yeah, typically. So generally what we see is profit taking, and then we'll see the market start to slow down. So obviously the people actually moving the markets start to take holidays. And do you know why that is? It's because there's no secret algorithm pushing price. And that's why during summertime and during Christmas, we see the market slow down, because there is no magical algorithm that is driving price to liquidity pools. It's more just, normal people that take time off the markets. Okay. Pound Australian. We've done Pound Australian. It's very bullish in my opinion. We've got, Pound Australian is the top bullish reading on the Edge Finder. The technicals look pretty convincing, especially on the H4. We could just be coming to test this previous high, or maybe even just a 50% pullback, which either way seems fine in my opinion. So we could look to go long something like this. May I know where the key area for UJ? I'm thinking of shorting it. Let's see. Well, this isn't financial advice, but if you're looking to short UJ, I think you're going to be in for a very painful experience. Again, although I am relatively bullish on the yen, I think the dollar continues to be sort of the top performer. So to be honest, if you really want to go short, I would stay up here at 161.185, so at the previous high. I think this is kind of the only situation you would kind of need a tight stop as well, because if we start getting the carry trade movements back and we start seeing, this sort of stock market movement in terms of it's just going to the upside, you're going to be in a world of pain if your stop is something like this and you're just holding through days or weeks of drawdown just to inevitably get stopped out. To be a pro, how much of time? I think I know what you mean, but if you mean how long does it take to become a professional trader, it really depends on how much work you put in. So, you could go to a trading floor with your degree and become a professional trader in a couple of weeks after your training and get some experience. But if you're retail and you're just learning from YouTube and stuff, it's going to take you a long time. Because then you first need to go through all of the absolute steaming garbage that people put out. Then you'll probably learn it. You'll probably try to use it. You more than likely won't make money doing it. So you need to go back, unlearn all of that, then relearn what does actually work. So you're going to spend a year, 2 years doing all that stuff. James Bro, we can hear you every breath. Sorry, buddy. My mic too close. My bad. It's a problem with being fat. I have to take big breaths. Okay, pound dollar. Sorry, I missed that one. You've made me all self-conscious now. Made me blush. So for pound dollar, this support level still remains intact, really. So yeah, it's tricky. I am bearish on pound dollar overall. I think, obviously, like I've been saying this whole stream, the dollar strength just isn't something I'm willing to bet against. So really, I'd be looking for the break, the retest, and then the continuation to the downside. I see two take profit levels, either one at this the low at 1.23, so down here roughly, and then if we break that, then the next stopping point really is the sort of larger support down here at 1.21. But yeah, that's basically it. Okay, cool. Hamza FX. I think I've seen that name before somewhere. I don't know where it is, but it's ringing a bell. Anyway, moving on. I joined late, James. Which trades are you currently in? I'm currently in Euro Yen, and that's it. So I'm DCA. Well, not really DCAing yet, but I did scale into Euro Yen here. Looking for some sort of mean reversion, to be honest here, even if we don't get anything too large, which is why I scaled in, just looking for some sort of pullback, possibly even just down to the previous, or sorry, down to the current low of the day. So we'll see how that goes, but that's it. I'm happy to hold this one for a couple of weeks if I need to. I'm not in any immediate positions. So actually I can show that to you here. So it's just Euro Yen here, and that's it. Currently in about 1% drawdown, which is completely fine. Oh, Marcus, I just saw your thing. Not maybe, definitely regarding the JPY longs. So you looking to go short yen, I assume? And to be honest, I can't really even argue with that. With the way the yen's going at the moment, it's not looking too good. So we'll see. Maybe I'll have to hold this Euro Yen position for a couple of weeks to actually get back to some sort of break-even price. We'll see. Cedric, yes, new haircut. Got it today. Thank you for noticing. I appreciate it. Do you have yearly membership? Not publicly, but if you want a yearly membership, just message me on Discord or Twitter or Instagram or something. We can negotiate something. Do you think CHF-JPY is still bearish after yesterday hike? They didn't hike yesterday. They held their rates. Okay. So the way I see the yen right now is, actually, let me pull up a yen pair. That would be a bit more helpful. We'll go to Australian yen because I think this is probably the best candidate along with Euro yen. So what we've had is the Bank of Japan originally said, I think probably a week or so ago, they said they're not in a rush to hike rates. They still want to, but there's no harm in waiting. So that to me told me they're not really going to hike rates. So again, if you listen to what I've been saying for the past couple of days, I've been telling you that I just don't see a rate hike coming. Obviously, we didn't get the rate hike. So I think that seems to have shocked some investors, leading to the yen weakness, which is what we've seen here. So short term, quite bearish on the yen, but long term, I think we're still in a position to see some strength come in, because although they didn't hike rates today or last night, again, depending on time zone, they do still want to. It's still on the to-do list, essentially. So to me, all of this upside movement, even if it's something like this, is still going to get pummeled eventually. But again, this is all speculative trading. I don't know for sure. I'm definitely not telling you to start loading up on yen longs. This is just the way I view it. So Marcus is short on the yen. And to be honest, Marcus, again, like I said, I'm definitely not in a position to argue with you. I'm in drawdown. The yen's going to the downside. So fair enough to you. Maybe I'm wrong, or maybe I'm just a bit early. Nat we've covered pound Australian, I think 2 or 3 times already. But I'm overall pretty bullish on it. I think where price is now could be possibly a turning point, or like the creation of the new higher low. Market participants are finally realizing inflation is going to remain higher for longer. Is that the only reason why indices in gold fell yesterday? Well, they fell mainly, in my opinion, due to the perception of the dollar. So gold doesn't really have much supporting it in terms of economics or geopolitical situations. There isn't really much there. Everything's already priced in. So for gold, it was likely, and this is more of an idea rather than a fact, but what I see is there's been a huge amount of buying all year on gold. Again, elections, a rate cutting cycle. We've had Russia, Ukraine, we've had the Middle East. It's been a whole mess this year. So obviously that led to gold going higher. Now we're at the end of the year. We've had positive data for the US. We're slowing down on rate cuts. So it's provided an opportunity for people to get out of this market, realize their profits, close out for the year. And that's basically it. Obviously, there's a little bit more, there is the overall thing of if the US economy is doing a little bit better, then we're generally going to see an outflow of gold. So yeah, that's basically the view. As for the indices, generally we see indices perform a lot better in rate cutting cycles and rate hiking cycles, or even holds. So when we've seen the Fed basically tell us they're going to start holding rates, it's obviously been a negative thing, because when we have rate cuts, it's basically making it cheaper for people to borrow money, helping businesses expand and grow. So when that slows down or pauses or even hikes, then we see the opposite effect, where we start seeing the indices take a little bit of a hit. So yeah, I mean, it goes a lot deeper than that. I'm giving you like the face value of it. That's typically what I tend to do, but yeah, there you go. Hey James, how are you doing? Love the fresh cut. Thank you, Wonga. I appreciate it. I'm good. How are you? Seems like we are going seeing a little hit to the commodities and the indices. Yeah. Yeah, I wouldn't be surprised if we see gold start to take a little bit of a dip as we close out the year now. I mean, it already has done, but I wouldn't really expect a huge recovery. Again, there isn't anything to really drive that, in my opinion, other than a sort of a natural correction. But that's basically also happened, and we've seen the market now pull back. So euro pound as well, actually, maybe getting an entry here somewhere. I'm not going to take it again, but doesn't seem too bad. Potentially going for a short position here. We've seen the break. We've seen the possible retest here. The trend remains to the downside. The problem is with euro pound, it's just so difficult to get an entry, because it's so, I mean, it's trending to the downside, but the overall price action is very sort of range bound. And I know that's kind of contradictory, but it's just horrible price action to try and get into. But yeah, it's tricky. I've missed this trade all year. I took one short position and I was stopped out, and it's been very unfortunate. Doing great, winding out of the year too, with more family time. Yeah, me too. I'm pretty much done now. The only time I'm really on the charts at the moment now is when I'm coming here to do a stream. I've got euro yen shorts on, but again, I'm looking to hold those into next year, so it's not really something I'm actively paying too much attention to. Just scaling in if needed. But yeah, pretty quiet really. I think the majority is done now for the year. We've had Bank of Japan, we've had the Fed, we've had unemployment. In my book, there's nothing else really to do. So into next year, quite happy to continue buying the dollar, especially if we're slowing down on the rate cuts and possibly even getting a hold. So yeah, euro dollar shorts, definitely going to be straight back into that as soon as we start seeing some more volatility come into the markets. I Let me just check. Well, we've got a second. Let me check the schedule here. Okay, so I've got about 15 minutes more, and then you've got Chris coming. So feel free to ask some questions if you have any left. If not, I'm quite happy to keep rambling away. But yeah, I'll be honest, I've kind of broken my trading rule this year. I've been saying for the past 2 weeks, I'm done. I'm not trading anymore. I'm done for the year. I'm done. And I keep just getting these setups that I can't turn down. So I'm up 8.6. I should pull it onto here so you can actually see it. 8.6% this month, 11.6 last month, averaging 6.87% every month, which obviously is slightly inflated. But yeah, it'll be interesting to see what happens next year. Going in with obviously already the bias of some dollar strength. So yeah, we'll see what happens. Okay, cool. When is BOJ's next policy rate decision? Let me double check for you. Give me 1 second. Let me find the date so I don't misinform you. Hold on, it's not loading. Give me a second. Here we go. So it's on the 24th of January next year. So actually not far away. Yeah, so it does look like they're going to hike in January so far. Obviously, so it's only very early on. But yeah, so far it seems like they are going to hike from what I see. Looks like a position building up for next year. Cedric, that's exactly the way I see it. I think, yeah, we might see some yen weakness as we finish out the year now. But yeah, I wouldn't be surprised if this is more a case of selling the yen to buy it lower. So obviously we've had pretty large downside move really, which is actually coming very close to this level. So I'm going to jump back on my narrative that we might see an intervention coming very soon. So the way the Bank of Japan intervenes is normally quite covert. So I think, and I can't remember if it was last time or the time before, but they did it on a bank holiday. They've also intervened at the same time that US news came out. And it's always very shady because they never say, obviously they don't say we're going to intervene because everyone would just go long on the yen. But it's always a little bit of a, Da Vinci Code decoding. When are they going to hike? When are they going to intervene? Why have they intervened? Blah, blah, blah. So yeah, a bit difficult. But yeah, as we're approaching the pre-intervention level from July, it wouldn't surprise me if we do see an intervention right before we have the hike and we see the yen go parabolic. Now, that's obviously just a very rough thought. I'm not saying that is going to happen by any means, but it's obviously a possibility. I'm hoping to get a last squeeze out of the markets on Monday. Then that's it. Or is Monday not a good idea? I don't think it's fair for me to say it's not a good idea because obviously it depends on how you trade and what you look for and things. But for me, it's definitely not a good idea. Even this week has been a little bit of a push for me. That's why I was saying last week that I'm done trading. I'm trying to get out of my positions. And you've seen me take, 2 or 3 positions this week. And again, that was breaking my own rules, but I just couldn't turn down a good setup. But yeah, next week, I'm definitely 100% not trading. And if anyone actually struggles with over trading and things, something you can do is just delete MetaTrader. Just completely remove it from your phone, your laptop. And I'll be honest, if you're a little bit lazy like me, it's going to be more effort to download it and log in again just to place a trade than it is just to leave it and forget. USO on top of the 30 Bollinger Band. Let's have a look. We'll do WTI. Oops. Oh, here we go. Yeah, it is actually. I'm not sure about going short on oil. It's just not in a great position, in my opinion. It's kind of just up and down. But again, top of the Bollinger Band, if it's range bound, we could just sell sort of the resistance zone here. Makes sense, but it's not strong enough for me. Pound dollar drop. Yeah, it is, isn't it, actually? Yeah, this is the thing. We're just seeing the dollar is just taking over. There's no way really for me to go short. Go short on the dollar. It's just long dollar, sell everything else, in my opinion. Euro, bad spot. Australian dollar is in a bad spot. The pound, I wouldn't say it's in a bad spot, but it's definitely not going to be able to keep up with the dollar. The yen at the moment isn't able to keep up with the dollar. It's, buy dollar, sell everything, period. Yeah, no problem, Lee. Nikki, have we still? Let's see. I know the Nikki was, the Nikki's still bullish on the Edge Finder, but again, this is another market that's just stuck in a range. It's definitely not something I'd want to touch really at the moment. How long has this been? Actually, let's see. Date range. So been basically ranging since here, a 90, an 86-day range. It's just disgusting. Awful price action here. US good GDP, unchanged interest rates. Yeah, the news today was quite supportive, really. The unemployment claims, again, stable. Beat the forecast, beat previous. So that's another tick in the strong labor market box. We've got GDP also climbing up quite nicely, actually, at 3.1, expected at 2.8. It's another tick in the strong US economy box. The US is having a bit of a good time right now. Also, do you guys remember what I was saying about pound dollar? When I was saying about this trend line here, retail trying to buy it, and they're going to get liquidated, which, to be honest, seems like is kind of what's happening now. Similar is, actually exactly the same as what happened on euro dollar a couple of weeks ago. Again, retail was buying the bottom of the trend line and very quickly liquidated. This is why trading with economics is important, because you can ignore all of the technical stuff that might lead you one way when actually the market's doing something completely opposite. It's always a good idea to check what's going on. Let's see. I think Euro Australian actually is the only Euro pair that's doing quite well. Interesting. NAS 100 bullish on Edge Finder, but looks like a break and retest of support. Looks kind of scary. Let's see. Yeah, it's a little bit of a tough one. I think from a technical look, it still looks quite nice, but I don't like the way it's formed here. The rejection to the upside, telling me there's not enough buyers that are wanting to see any correction of this candle just yet. We've now got quite a strong opening to this H4 candle to the downside. The RSI didn't really manage to come out of an oversold area. So yeah, it's not looking primed right now, in my opinion. NAS 100 goes up over time. Doesn't matter. Money print asset goes up. Kyle, absolutely. I couldn't agree more. But the problem is when you're actively trading like what we do here, if you're saying that you could have gone long here, thinking, oh, this market only goes up, you're stopped out. You could go long here. You could even use a tight stop, whatever. Markets only go up, stopped out. So yes, in the long term, these markets do go up. But if you're actively trading, speculative trading and not investing, you still need to be able to time these markets. Because you could have said, during this period, it only goes up and then lost, I don't know, however much money. Same thing here, and every single dip. So yeah, if you're not an investor, then you still need to be able to time the markets. Does German 40 look good for sells after the H1 break? I'll have a look now. You have to find entries. I mainly just side with Nick that I have a hard time shorting any indices. Yeah, Kyle, that's my rule as well. I don't really short. The only time I will go short on the S&P or the NAS or the Dow is if I have a very compelling reason. So whether it's something like COVID or a rate hiking or cutting cycle, that's the only time I will be really looking to go short. Otherwise, it's more when's the next drop so I can buy more. So yeah, the DAX to me looks like it should be coming to the downside. I wouldn't really want to go long on the DAX. The weekly, last week's candle closed doji. We currently at the top of our ascending channel. The Eurozone economy, pretty poor, in fact, very poor. Doesn't really make me think investors want to be involved really too much. This move was driven by earnings, likely seeing a correction of this now. So yeah, it doesn't really look appealing for me to start going long. So yeah, I think if you're looking to go sells, I think you're in the right idea. But again, trying to time it might be a little bit tricky. Yeah, there's not too much else here, I don't think. New Zealand yen. Yeah, so luckily I'm not in that one, but I've got the same idea with New Zealand yen that I do with the Australian dollar yen. I think the downside is coming. It's more a case of when is it going to come? And by the way the market's reacting, I think it might be sooner than later. This is very aggressive moves to the upside that likely will see corrections. Probably not today, though. The yen is still seeing a lot of selling pressure. So yeah, to be honest, it kind of seems like it's at quite a nice level to sell here. I'm just not confident, though. That's the issue. It's possible we might even see this previous support get tested again. But yeah, I don't know is the answer, unfortunately. I think, yeah, long term, so over the next sort of couple of weeks, maybe a couple of months, we'll start seeing some buyers come into the yen. But for now, the way it stands, it's seeming quite bullish on the yen pairs, so bearish for the yen, which obviously isn't really what you want to get into. So I wouldn't be buying it. Sorry, I wouldn't be selling the yen or buying any of the yen pairs. I'd more just wait to find that sell entry. What else have we got here? Bitcoin. Oh, Bitcoin's seen a bit of a downturn here. Strong bearish weekly candle so far. Daily isn't looking too convincing. The H4 is quite, well, it's still technically bullish, but looks quite bearish. H1's about to flip bearish. My expert analysis yesterday might be what's going on about the McDonald's crypto bros having to withdraw some money for Christmas. Hi, James. I want to ask if you have a trading journal. Do you write in a notebook? No, I do not have a trading journal. Actually, what I do have, I'll see if I can show you it. I have a book here where I write down information regarding markets and things, but I don't journal trades because I think it's a bit pointless, really, when you get to a certain point in your trading career. So if I had a trading journal, it would all be the same thing. It would be sell euro dollar because of weak eurozone, strong dollar, blah, blah, blah. And that would be the whole of my trading journal for the past 2 months. So I don't need to go back and look at that. I just don't. There's no point. So what I do is I will export my trading history. So if you go to MetaTrader, here, go to history, click here, get your report here. And what you can do is give that to ChatGPT and get feedback. I mean, it's only very basic feedback. You don't get anything super complex, but it's like, okay, your Sharpe ratio is pretty poor, or you could hold your winners longer, cut your losers quicker, blah, blah, blah. And you can start looking back on your trades and things from there. But yeah, generally speaking, I just don't journal. I've got my FX book, trading history, all that sort of stuff. I also put all my trades in my Discord as well. So it's generally just quite a pointless thing for me to do. It's a bit of a time waste. For starters, do you recommend having a journal? Yes, absolutely. I think if you're still developing your trading and you're still working out risk management and all that sort of stuff, and you're still trying to pinpoint entries, I think a journal is a pivotal thing. But once you've got all of that stuff down and you've been making money for a prolonged period of time, again, it just becomes repetitive. It's not something you need to look back on, really. And yeah, Quiet Menace, my YouTube channel is a journal. So every week I'll put out a video explaining what I'm looking at and why, document some of my trades on there as well. So yeah. And the other main point is that, I'll be honest, I'm a little bit lazy. I'm quite happy to go into the markets, make some money and get out, and that's it. I don't want to have to sit there and write a load of nonsense about why I'm taking the trade, because I already know why I was taking the trade. But again, you know, that's not good advice for new traders. That's just my view at my point in my career. If you are new, journaling is essential. Same thing with backtesting and all that sort of stuff. But guys, Chris is here. So yeah, no problem. Guys, have a great day. I'm not sure if I'm on tomorrow. I think I might be, so I'll probably see you tomorrow. If I don't, have a great weekend. I'll see you all later. Enjoy your Christmases if I don't see you before.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Thursday. Nobody died, right? Yesterday was a pretty crazy day. Fun, long stream with A1 Trading and getting through FOMC and taking it right to the close. Pretty wild. I have a little visual here if you're interested in some whys and what happened. And it's, you know, of course, after the fact. But look, we have the RSP, which is equal weighted S&P on one of the worst losing streaks ever in history. We have the Dow Jones down for 10 consecutive days, the worst losing streak in 50 years. We had the volatility index spike up 74%, which is the second largest single day move ever. The first largest was, you guessed it, August 5th. We had the CAPE ratio showing that the U.S. equities valuation, it's just, look, U.S. is 63% of total market cap. The CAPE ratio shows U.S. equities are now 86% higher than European stocks. I mean, this stretch away move of how much better the U.S. is compared to others, this begs the question of, is the U.S. valued accordingly? Is it overvalued? Is there going to be a reversion? Is the U.S. going to start plateauing while other, you know, indexes and countries can start catching up? Or is it that there's cracks globally that are now going to start leaking into the U.S.? Like, there's no way that the U.S. can be immune to everything that's happening elsewhere. So just a little bit more of like a fair market search in the indexes. And monetary policy yesterday, I mean, Powell was surprisingly vocal on a couple of things. I mean, I did not expect him to go down to, I would say that was a bit of a rabbit hole for him yesterday to talk about tariffs and how it weighs on their decisions. He spent a lot of time talking about inflation and how it is higher than what they wanted. And even the target for inflation next year would be 2.5%, which is, again, no closer to 2%. Look, I mean, the numbers showed this year, like our CPI got as low as 2.4. And that's when the market was celebrating. We did have a victory lap coming to that September rate cut by the Fed. I think that victory lap was a little premature, as we can see with now 3 prints higher in inflation. Concerns mount as higher inflation expectations 2025 from the Fed funds rate end of year restrictive at 3.9. So you're looking at maybe 25 to 50 basis points of cuts next year, maybe. Geopolitical tensions, new axis. That's interesting there. China, Russia, Iran. We've heard about BRICS for multiple years now. Is it gaining traction? Is it gaining power? I don't know. Maybe. Short bets are paying off. That includes me. I mean, I've been hedging now for months. Hasn't really paid off since August. But I did take some profit yesterday. I had a nice hedge on MES that I closed out for profit yesterday. I was I'm still watching my SPY hedge. I'm still watching my QQQ hedge. I have some out of the monies as well as some bear put spreads. Tesla and Nvidia, which we know market cap wise are pretty big, right? Tesla crossed over $1 trillion market cap. Nvidia is like the second or third largest company in the world. They had notable intraday price movements, heightened volatility, market uncertainty. So that's where we're at. Taking a look at the futures market this morning. This is the ES feed on top left. This is the NQ feed bottom right. This is our FOMC intraday sell-off yesterday. Just the market got smoked for those couple of hours from 2 to 4 p.m. One of the rare occasions that FOMC was just purely directional. It was initiated right at the 2 p.m. movement and just proceeded to go down all afternoon. But what did we do since then? Well, it looks like we bottomed out right around, closing bell, and we have been fighting back slowly but surely. But I will say this could be just a very simple bear flag. So you have this major drop, you have a little bit of pause, and then if the market is really eager to shed and go lower and volatility is going to continue to swell, then a bear flag move, if we get a breakdown here, okay, we could have more downside. So, it's always questionable, but it's like looking at the ES futures feed. I've got this box representing my 930 candle. I've got a nice little trend line break if we have a bear flag. If we get below this area, there's room to get down to yesterday's low. So there could be more, flows today to push us back down to the lows. If that is the case, we're going to continue to see IV, which is implied volatility, gaining higher. Right now, the SPX IV rank is 68.6. It was literally 7 2 weeks ago. It was 12 going into FOMC yesterday. It is now 68.6. That is a monster increase in volatility. That's what happens when the market is kind of caught off guard. And you can see that. I mean, it's really easy to see what the market looks like when it's caught off guard, right? Look at the VIX yesterday. One of the largest single day moves we've had since that August 5th, Monday. So where are we today? Well, somehow we faded halfway back and we're back to 22 instead of, opening up around 27. There's just, it's a very tricky instrument to trade, but this is why, based on your 30-day option prices in the S&P 500, this is the fear gauge. So when there's a huge move in fear and risk off trading, that's your VIX spiking up. And, if we look back and see like what was 2024's trading year like, there's a lot of takeaways from 2024. For the most part, we had a pretty simple trading year, with the exception of what happened late July into August, which was a volatility event that the market was happy to buy the dip on, but it was a little crazy because that was a very aggressive rush to the fire exit on that. Basically it was a Thursday to Monday. We had the SOM rule activated, which was, our 3-month employment trend was now trending higher than the 12-month, something like that. It's a weird formula. And then it was even discounted like a month later. It's like, oh, the SOM rule is not really accurate, even though it's been in this undefeated recession indicator for employment. Doesn't matter. But it was a Thursday, Friday, Sunday, or a Thursday, Friday, Monday. But the problem was over the weekends, futures market opens up, Japan opens up, all these crazy things happening with Japan. We had like a 17% drop in 2 days. We had a 27% peak to trough in Japan that absolutely dripped into the U.S. market aggressively. And we had that huge spike in the VIX. We had that huge, 10% flush in the S&P, 15% flush in the NASDAQ. That was August, right? Other than that, the year was pretty good. And what did August 5th look like? A crazy low, crazy high volatility, but everything got bought. And by the time we got to September, which is supposed to be the traditional September effect, all we had was a little sell-off the first Labor Day week, and it was back to all-time highs again. So it was crisis averted, so to speak. September, October, into the election. Trump wins, market moves on Trump. We go into all-time highs, all-time highs, all-time highs, 6, 7, 8 all-time highs out of the S&P, multiple all-time highs in the NASDAQ with no market breadth. And we had another volatility event yesterday. So how does it wrap up for the rest of the year? Well, I think it's going to be very difficult for the market to get to all-time highs. It's like that was a very damaging candle. This market doesn't look nearly as aggressive like it was here to kind of buy the dip. This was like, oh crap, we've had a great run, and I think that pretty much put the lid on the market for the year. I mean, anything's possible, but I am guessing with the amount of low volume that happens towards the end of the year, the only thing that would pay out for the rest of the year would be maybe some hedges, maybe some downside protection, or this is a break and a pause, and then we just wait and see where this market tries to pick itself up. Can it come back from a 3 to 4% sell off? Of course it can. Can it get worse? Of course it can. I don't know. But I will say that I'm still going to ride out some of these protective moves. We did have a nice strong close on the daily chart below the 50 moving average. Is there more room to come back into this post-election move? Look, the Dow has already erased the post-election run. Right? Is the S&P going to follow? Look, this is crazy. This is the election right here. There's our post-election day gap. The Dow has filled it. We now have that big losing streak on the Dow that we haven't seen for over 50 years. And is this a sign of what the S&P and the NASDAQ is about to face? Maybe. Why would the Dow be so much worse as an index than the S&P and the NASDAQ? And granted, I understand like United Health Group is having its issues right now, and that's like one of the heavier weighted stocks in DIA. But I think everyone can agree that it's pretty overweight in the SPY too. It's all about the Mag 7. So let's take a look at Mag 7 stocks. And if they're not looking good, then we're probably going to have more pain, more pressure, at least to the downside. So Apple, we're up on the day for Apple. Amazon, we're halfway in between, kind of an indecision day, but a pretty nasty sell-off yesterday. Google, after ripping for those 2 or 3 days in a row, getting to fresh all-time highs, we had a pretty nice 2-day sell-off. Meta finally pulled back to a 21-period moving average. I still like Meta. This is another bar count that I'd be watching very closely. Oh my gosh, this is probably like an NVIDIA bar count. Oh baby. All right, well, this is another stock I'm going to make a little claim here. Meta has gone 473 bars before we hit. All right, I'm going to say this. Meta likely hits the daily 200 EMA before hitting all-time highs. Okay. And I'm obviously a lot more comfortable saying that now after putting in some pressure like we did yesterday. This is 473 bars. NVIDIA is the same thing. Okay. It's the same thing. So it's a very high bar count. Rarely do we see stocks stretching over 300 bars, let alone 400 bars. It's 473 bars. We're going on nearly 500 bars. So I think best case scenario would be Meta's probably on borrowed time as far as going sideways, or there is more pressure to mount and have this thing unwind a little bit. Maybe it's a broader market move. I don't know. But where am I interested in buying Meta? Deeper, 100, 144, 200 moving averages, somewhere in here. I will say this. If we get a sell-off in Meta, I will start establishing more 1-1-1 positions on this one because I don't mind owning it cheaper. I also would consider either a 1-1-1 where I have a trap, or I would consider a ratio spread where I can buy a put and then sell 2 puts to potentially take some ownership, as long as I can get that ownership price maybe below $400. Okay. But I want to be careful on that because I don't want to have Meta could be my gosh, maybe it's a 50% sell-off. I don't know. Right? Like it would be a 18% correction to get back down to the 200 moving average. Okay, fine. But what if it gets worse? Right? What if we have like a 30, 40, 50% correction in high volatility stocks like a Meta, which we've seen before? 2021 Meta was down, right? When we peaked out in November 2021, got into the bear market 2022, Meta, it looks like it's so far away, so long ago, but this was a drop of 76%. So me getting excited about like, ooh, I can get a little 17% discount. Well, Meta can get a lot uglier than that. So maybe the best trade would be not to tie up like 100 shares of anything, not to get, really deep into the options trade, because I don't necessarily want to tie up $40,000 of cash on a stock that might have a deeper correction, So there's my previous high. So that'd be a level I'd say, okay, Meta, maybe find some structure in there. That high to low, let me find this here. That high to low would be about a 39% correction. Like that's a starting point. I'd be happy to say, rather than putting out $40,000 in cash, I'd rather spend $2,000, $3,000, $4,000 dollar cost averaging. Then I find a little bit more structure that I'm willing to trade. Then I start putting on my options positions and start to generate the income. Make sense? All right. Microsoft. We pulled back to 441. I closed out Microsoft. It was a 265 debit, closed out for 495, nearly hitting full profit. That was great. Obviously, right now it might be a little bit in jeopardy. It was a 12:20 expiration, which means tomorrow we're still, $6 clear of my strike. Even if I was still in the trade, it'd still be closing out for mostly profit. But I'm certainly happy I took the profit before we had the sell-off. So this trade is done. And do I like anything on Microsoft? I do, but it's this. If we can't get back to the highs and Microsoft finds a way to get back down into these lows, the same type of thing. I want to have cash to deploy, probably dollar cost averaging in. I've got a 1-1-1 down here. I have a ratio spread as well. These are all fine for profit. They go out into end of the year and Q1 of next year, but they're way out of the way. Okay, if we pull back into, I'm going to say 410 or lower, I'm way more interested in some positioning. So 410 DCA level. I'll just make a note of that. So if we fall back into the 200 moving average or fall back into some of these previous lows, I'm looking to see, can we, buy some more. Netflix didn't really move a lot. We had a nice sell-off day yesterday. Netflix bar count, not crazy high, but up there similar to the S&P and the gold move. 290 bars. So we'll see. Again, I'd love to buy some Netflix. Where at? Lower. Is Netflix $1,000 stock? Probably at some point, but I'd like to see it pull back to like 700s first. Pull back into 700s and then give us some gains to 1,000. That'd be nice. Nvidia trading at 129. I'm watching this one closely for the week. I'd made this claim. Let's see, 1210. So this would have been last week. Hits the 200 moving average, which is my red line in the daily, before we hit all-time highs. So far, that seems to be going the way I thought. We do have another very high bar count like we have on Meta. This is a trade that I'm watching the closest for this week. I might take some assignment on Nvidia, and if I do that on Friday with this ratio spread, my ownership price is 125. Now, what I will probably end up doing is, if I take the assignment on Nvidia, and I think this is going to be everybody takes this trade. So meaning like my accounts here. So Nvidia, let's see here. Nvidia 132 by 130 right there. There's my ratio spread. So I would get the $2 bump, and I've got the credit on the trade as well. So let's see here. I'm looking to do the math on this one. So 307, 356. That should be 257 credit on the ratio spread. If assigned, I've got the $2 plus the 257. It actually should be lower than that if that math is correct. So I should have the assignment price 130 minus 2.57 minus 2. Yeah, that's right. Okay, 125.43 is the assigned price. Now, the first thing I'd be doing is, if I take the assignment where price is below 130 by Friday's close, the first thing I'm going to do with that assignment price coming into next week's trading is look out for a probably, 29 days out or 36 days out. I'll probably go 36 days out and take it to the end, or even 40 days out going to January, and look at Nvidia. Okay, actually, you know what? There's probably enough premium. I could probably lower it aggressively like a couple weeks out. So, all right, let me just talk out loud here. So let's say I get the assignment on Friday and it hits my broker account on Monday. I go out to the 3rd of January. An at the money, this is fine. An at the money call out 15 days. I could get 5 to 550 for that, which means in 2 weeks' time, I could go from a 125 ownership down to a 120 ownership. If price falls below 120, I can do it again, and I can do it again. And it takes me maybe 2 to 4 weeks to bring my cost basis from 125 down to maybe 115. And if my cost basis is 115, that is my 200 moving average, which is exactly where I'd like to own the shares, and hopefully we get a bounce from there. That makes sense? So my goal is, if I'm going to take the shares of NVIDIA, I'm going to try to repair this stock and also get, maybe a $5 net credit or a $10 net credit per share. So if I can walk away with $5, it's making $500 on 9 accounts. If it's making $10, it's $1,000 on 9 accounts. It helps. It's a nice little like income play, and it maybe offsets some of the pressure that the market's dealing with right now with these these bearish moves and this bearish tension to the downside. But I could hopefully get enough premium on NVIDIA. It looks pretty solid. So I'm kind of excited about the trade. Of course, if we get a spike up tomorrow and it gets back above 130, I don't take any assignment and there's nothing to do, and I just collect the income. So we'll see. But if we're below 130, I'll take the shares, and I'll kind of take it with a smile on my face because I'm pretty confident I can turn that thing into like a $5 or $10 winner. Right? Tesla, pretty big candle yesterday as well. More pressure to the downside. I'm still putting in my pending orders here for the pole rollers, trying to get into trade right around this previous high at 362.50. That's entry 1. So I'll say this. My goal right now is continue to monitor my hedges closely. I closed out MES. So I closed MES for profit. I have a SPY bear put spread. I have a QQQ bear put spread. And I have SPY out of the money long puts. And then I have NQ and MNQ long puts and bear put spread. Okay, a lot of these are 12/31 and 1/31 expirations. So I'm hedged out end of the year, end of January, just in case the market is not going to have the resiliency that it did back in August, and maybe this is a little bit more pressure and more of a reality check with it being so concentrated at the top and all these things like I'd mentioned. This week in these A1 sessions, in my own YouTube sessions for my final hour at 3 p.m., there's a lot of crazy sentiment out there that retail traders are just so bullish and so optimistic. It's usually a contrarian play, and so this little move from yesterday is just like a really aggressive shakeout, right? And I'm wondering, like, does the shakeout have more teeth? It would make sense. Like, we haven't really hit any balancing moving average for a while. The 200 moving average on the daily time frame for the S&P is still like 290 bars away. It's getting to that point where we could stall and just maybe kind of meander our way down towards that 200 moving average before the market gets excited to buy again. Anyway, we'll find out. But my goal is right now, watch my hedges closely. Okay, I've got more. That's not just the only goal. That's fine, because none of those trades maybe none of those trades pay me, right? MES I close out for profit. My SPY bear put spread, if we don't stay below 590, I'm only taking a partial at profit. QQQ for not below 510, partial profit. SPY out of the money puts are like so out there and they're so cheap that I really need to see like another volatility type event. I looked at it this morning. I was up like $1,000 at the end of the day. Maybe I should have taken profit, but I didn't, because I'm like, oh, if we flush a little bit lower, but I'll just watch them. Period. I'm watching them. They're hedges. Now, the other thing I want to do would be map out levels that I'm interested in trading and investing. So, a lot of what I'm doing is going to be option trades. So option trades with high IV. So that would be basically, selling premium. So I can collect income there. And also dollar cost average levels with affordable chunks. Right? So rather than buying $40,000 in Meta at a $400 price, or rather than buying, and I do have this position, and I put this in the Pulver Alerts, I put in a trade in Berkshire Hathaway. But if I were to take any shares of Berkshire Hathaway, I would own it at like a 17.5 to 18% discount. Berkshire Hathaway is almost like trading the S&P in a way. Like it's pretty correlated. Obviously, it looks different because Buffett and Berkshire has been a net seller of stocks, and we went up to test some highs and we faded pretty hard. But if I'm looking at like buying Mag 7 or buying any stock or doing anything, I'd probably just start with like $500 chunks, $1,000 chunks, and look at maybe 3, 4, 5 levels that I'm interested in. Use some of my deployed cash. See if I can build up maybe partial stocks where rather than taking on 100 shares at once, where I could control option trades, I can just dollar cost average and establish some investment pieces where I don't have to worry about time, and I get some levels that are notable discounts. Right? If I bought Meta 20% lower, but it's a dollar cost average level. If I bought MicroStrategy 20, 30% lower, if I bought Tesla 20, 30% lower, I think those are good starting points, right? So anyway, that's what I'm looking for. That's how I'm mapping out my trades for the rest of this year and into 2025. When Nick and I did our webinar on November 12th, we talked a lot about planning for 2025. And, this was one outlier. Like, is something going to break the market? And right now, it seems like we have enough of a downturn with the FOMC yesterday that's putting a lot of pressure and at least putting the bulls back on their heels, right? Like, the bulls have gotten fat this year. It's so easy to be a buyer. It's been so easy to be a buyer. And look, when you have leverage trading at the highest highs we've seen since 2021, when the market did topple over in 2022, that concerns me. You have crazy amounts of, spicy retail sentiment that's like the highest on record since the 80s. That concerns me. Like, it's a very simple, overloaded, crowded trade. And contrarian wise, it's easy to say you got to be hedged, you got to play some downside protection, and now it's starting to pay out. So the question is are these hedges, is this bearish sentiment like starting to really rise aggressively, or is it just like, okay, the bears had their fun, they got a nice little 3 to 4% correction, and now they're going to disappear? I don't know. Okay, but question for all of you is like, do you have a plan of what to do? Okay, I couldn't do any of this, by the way. If I was talking about this right here, it feels a lot better to say I'm mapping out levels to use cash that's been sitting on the sidelines than it was back in 2021 when I was still, on the euphoria run of like making so much money in 2020 and so much money in 2021 that I just stayed invested, and I didn't buy myself enough protection. And I was fully invested with zero cash available. And 2022 was more of a fight versus now it's like, man, I've got 40, 45% cash on the sidelines, just collecting a little 4.5% kicker, and I'll deploy that when I think it's appropriate. So I've got cash at the ready. I'm letting prices come to me. I've been talking about it for weeks, and it's been frustrating to feel like I'm not participating in these higher highs and, watching Google rip $30, $40 in freaking 2 days and watching Tesla rip after the election, having 80+% gains in a month. It's like, it's insane what these stocks have done in the last month since the election. And certainly in the Mag 7 the last couple of weeks, because it's been the only thing going higher. But it's nice to have cash on the sidelines ready to deploy. And I think that the move yesterday kind of put that in action. So I feel properly positioned for whatever's coming ahead. I can obviously control my risk with small chunks here. I can control my risk with option trades, and we'll be fine. And if my hedges pay out, great. That to me is like the bonus. If the hedges pay out, great. It just offsets some of the drawdown and I can get the levels that I want. If the hedges don't pay out, that's fine. I've been I've been losing on hedges all year except for April, August, and now. And if somehow they disappoint me because it's low volume into the end of the year, that's fine. It is what it is. Okay. All right. Berkshire Hathaway. This is the trade that I put on. I did a ratio spread of 415 by 410. I collected 225. This is out to March. So, do we have more pressure? Yeah, maybe. Here's the stock. Here's a bar count. Do we come back and find the 200 moving average? Sure. Well, we're at 288 bars. So, Netflix has a high bar count. Gold has a high bar count. S&P has a high bar count. Berkshire Hathaway has a high bar count. They're getting up towards 300 plus bars. Okay. NVIDIA, Meta, almost 500 bars. Okay. Look at NVIDIA. NVIDIA, all the way back here in January 2023. Let me make sure I'm not skipping anything. So that would be my last touch of the bar right there, and about 480 bars. So yeah, Meta and NVIDIA, I could see them just slowly or quickly, doesn't matter, but like flushing their way down towards the 200 moving average. And, this is a important level, as is this low and that 200 moving average plus that support. If Nvidia breaks this, would I be like, oh my gosh, Nvidia's, I don't know. I mean, Nvidia is still pretty well positioned, but let's say Nvidia comes down to test or break that August 5th low. Would that all of a sudden make it like I don't want to trade the stock? No. Look, I will walk you through everything I'm doing with this trade. If I'm taking assignment on Nvidia and I lower my cost basis to 120 and lower it to 115, and it's the same thing I'm in with JD and Alibaba and Baidu. I'll still repair those trades and just keep collecting premium. But with Nvidia, if I can lower it to 115, awesome. If I can lower it down here to the August 5th bottom at $95, freaking fantastic. But do I have to prepare? I mean, is Nvidia going to drop 50, 60, 70%? I have no idea. I don't think so, right? I mean, it's not that hated yet. It's not that like the competition for Nvidia is not that good yet to dethrone it. So I think that it was a bubbly story with semiconductors, and Nvidia just for the last 10, 15, 20 years has actually become like the best performing asset in the world, which is it's a lot. That's a lot of pressure put on a stock that was a little tiny chip company, and now it's a monster. But I'll try to get it to attractive levels. Do I want to own Nvidia forever? No. I mean, I'm not one of the traders that can say like I've had Nvidia for the last 10 years. I mean, that's great. And I, envy anybody that's had that in the portfolio. But if I've traded anything in the NASDAQ, which I've had Nvidia exposure. If I trade anything in the S&P, I've had NASDAQ exposure or I've had Nvidia exposure, by proxy because it's a market cap weighted instrument. So anyway, that's where I'm at. Let's take a look at the 10-year. What did I say I didn't want to see on the 10-year yield? I didn't want to see it going higher. Again, we're talking about this bond trade that is making the Fed, I don't know, eat their words, making the Fed. This is probably another reason that's going to make things tougher moving forward. Frickin' A. I look at this going higher at another almost 0.9%, and we are now it's the complete wrong direction. I mean, the Fed from this point has cut 100 basis points, and how many points are we higher on the 10-year? 96 basis points. This is literally the opposite of what the Fed has done in the markets. It's crazy. So this isn't a good thing. Look, there's big money behind this. I get it. I almost wonder if this trade is going to be, if things get worse, I could see it being in the bond market. If things get worse, it's like the bond market gets pushed down so low because yields are still going up higher. The pressure is on to take these yields up and these bonds down until ultimately it's going to force the Fed to react to something, right? If the Fed has to be reactive, that's when it gets concerning because the Fed's always been reactive. They've come in and they've saved the day and they've backstopped everything. But man, if there's a time in these next like 12 to 24 months where the Fed comes in and they backstop something and the market's like, you missed it, man. Like nobody cares anymore. That's I don't know. That's where we have like way bigger problems. So I don't know what to make of this outside of don't be surprised to see auto loan prices going higher, mortgage rates going higher, and as we get into the end of the year into Q1, I mean, other than the Fed saying we're going to be more restrictive, I don't know what this does. Like if this keeps going higher, even though the Fed is now like done cutting and they're going to be pausing, right? Like pausing until maybe May, June, July. Okay, like is that restricted enough to turn this back down? I don't know. So I think if you're wanting to get a pulse of the market and kind of think a little bit macro and bigger picture, this is a really good chart because if this goes higher, it's going to put a lot of pressure on the overall markets. It's going to be tough for the markets, in my opinion, to gain higher highs, all-time highs, have a healthier bull market when we have higher borrowing costs on everything. Everything from, little tiny consumers that are, student loans and consolidations, to refinancing a home, which nobody's going to refinance at a higher rate, to closing on a home at a higher rate, to houses that still haven't come down in price. So we've got unaffordable housing market, refinancing any debt for the business, refinancing or structuring any debt or servicing any debt at a higher cost for anything gets more expensive. Even servicing debt from the Fed level gets more expensive. So I think this is a really real chart to see that it's been fun, but the reality moving forward is I get that like the stock market doesn't necessarily reflect the real economy. I get it. We saw that disconnect, aggressively in 2020. We saw it in 2022. We've been feeling it for 4 years on Main Street, but here it is like, maybe Wall Street finally catches up. We'll find out. But this 10-year yield is going to be a really, really important chart to watch. Okay. All right. Futures wise, junk bonds. This is going to be a big drop. Yep. This is going to be your loosening in credit spreads. So your AAAs, your BBBs, your CCCs getting looser. Okay. Is this a concern? Well, that's another thing that I didn't talk about. I mentioned the last month or so, but I don't highlight and harp on this every single day. Our credit spreads from like AAA, BBB, CCCs were as tight as they were before 2007, before 2008's crisis. It's like, that's how complacent this market was. So anyway, it's starting to loosen up a little bit. There's obviously a lot more volatility that came into the market yesterday, and we'll see where this ends up going. But keep a close eye on this one as well. So JNK, US 10-year, keep an eye on those. China stocks, anything exciting there? Not really. JD is down. I've got this thing rolled out to 38. SCHD, SCHG, this is another one. This is Schwab dividend. This is Schwab growth. These are others that look. These are ETFs of anywhere between like 100 to 200 stocks. It's a little ETF through Schwab. Low cost structure. The expense ratio is pretty light, but they do pretty well. I mean, average dividend on this one's like 3 to 4%, and the growth one, obviously, growth has been killing it the last 3, 4, 5 years, 10 years even. But where am I looking at price levels? Well, this would be another one that I would look to dollar cost average into. So SCHD has been getting killed. That's the Schwab dividend, and then SCHG has yet to really give me a pullback that's meaningful. So I'll wait and see. Do I want to invest more at this? I mean, look, it's a $27 product. So why did I get interested this year in SCHD or SCHG? Because they did a stock split. So when this was trading at $200 and then it traded down to 20 some dollars, I'm like, well, it's cheap enough. I can throw a couple bucks at it. So I did. Okay. Advanced decline line. Yesterday, obviously, was a nasty, nasty day. Everything went down. This is the total stock market declining, 6,000 plus stocks declining. Here is the NYSE, 2,000 plus stocks declining. Here's your volume, heavy volume to the downside yesterday. This is what I thought was interesting. So this is the S&P 500 with the 50-day moving average. And right now it shows that we have about 19% of the stocks above a 50-day moving average. Okay. You want to know what those stocks are? Well, I could probably name 7 of them. Okay. Maybe 6 of them. But very few of the total stock market, as far as the S&P 500 goes, very few are above a 50-day. Now, the reason this is important to me is this is another reason to justify if I'm going to deploy some cash, where would I do it? Because the last time we saw this thing really get to a bottom point where it's like, oh my gosh, only about 10% of stocks are above the 50 moving average. That means 90% of stocks are below it. That to me is a buying opportunity. So look at October 2023. If anybody knows what happened there, that was a pretty strong Q4 rip. Okay, look at October 2022. That was an aggressive. That's what got us out of the bear market in 2022 was that October bottom. Okay, so same thing. It's like if this thing gets to like 10 or less, I'm going to start looking at a broader recovery. So is there still room to drop? Yep, there's room to drop. But I'm pretty interested if this thing gets down to like 10 or less. I'm going to start looking at either index trades. I'm not necessarily looking to be like a full-on stock picker for 2025. I think as we move forward, I want to have quality stocks over quantity. Okay, I like diversification, but I can diversify in the haystack. And obviously it's less volatility. There's less gain. It's like, yeah, it'd be nice to have a stock that goes up, 100%. Have a Palantir, have a Carvana, have a whatever freaking 100 stocks went up like 100+% this year. But if I can't pick those stocks, or I don't believe that those stocks are going to be sustainable, or those stocks that had such ridiculous rallies in 2024 are going to drop a ton, I'm not trying to pick them. you know? And I think that's where traders get in trouble too, is you chase something. And interesting study, you go back like 50, 60, 70 years, if you try to be a stock picker, you ultimately lose. Like, because stocks will always rotate and businesses have cycles, and they have success and they have failures. And so, look, Palantir sounds great. It's been added into the indexes now. Congratulations, Palantir. But the stock's up like 180%, 200%. You know, if it pulls back 30, 40, 50%, maybe deeper, well, maybe I'll throw some more Palantir. But I don't know. So I just think for me, it's like I'd rather survive in, like, I know that I can take, you know, if the S&P goes up 10% for the year, I can probably trade enough options around that to generate, you know, 20% in gains. I can trade both ways. I can hedge. I can do income trades. I can do all sorts of stuff. I can trade the Qs and the SPYs. I can trade the indexes like SPX and NDX. There's all sorts of ways I can trade just the haystack and generate income and beat the benchmark. I don't have to be this crazy stock picker that's like, I've got to pick the perfect top or bottom on 1,000 stocks. It is exhausting, and it is lucky. And as far as buying and holding, it's luck, you know. So I don't know. I've other than having like Apple since I, you know, got into college, or Netflix since I got into college, that was a nice like 20-year run. You know, I mean, the little investment group that I ran, you know, we had like 15 members, and we invested in stuff like that since the early 2000s. We participated unknowingly through like the dot-com crisis and the great financial crisis, and we just had time in the market. And we're like living, breathing testimonials to the 20-year history that if you go back into any time in the stock market for over 20 years, there's never been a horizon that you haven't made money. You could have bought the absolute toppiest top anytime since 1929 and made money. So we did. Like, we had 20 years in the market. You know, why did we stop trading? Well, my brother and some of the people that were in our club, their college closed, and so we had a bunch of professors. And when the college closed, you know, their revenue dries up, and they don't have a job, and so they're moving, and they, you know, are sitting on 6 figures of profits from this little investment thing we did for a while, and so they cashed in, and we all of a sudden went from having, you know, a few $100,000 in cash to buy and participate to everyone wanted their money out. So we dissolved, and it was fine. It was a good 20-year run. We made some good profits on it. But the lesson there was time in the market. And did we really know what we were doing? I mean, kind of. Not in the beginning. It's like I was a kid, but it's like I was interested. We followed some basic, you know, newsletters and built some scanners and found some fundamentals and tried to identify some quality. We picked some stocks, but we really just participated in the haystack, which is the SPY, which is the Qs, right? So anyway, I'm just trying to make trading easier. It's like everyone, it just seems like we have so many traders out there that, you know, give me something leverage and I'm just going to try to, you know, all I need is like 10 pips. I need 10 points. I need this. It's like everyone makes like thousands of dollars or loses thousands of dollars in a day. I mean, I was actually very happy yesterday to see that I had like almost $9,000 in hedges offsetting a $30,000 drawdown. So my drawdown was 20K yesterday out of 2.6. So 20K out of a $2.6 million portfolio. You know, 0.7%, 0.76%, not even a full 1% drawdown yesterday. I can stomach that, you know? So anyway, it could be worse. It could always be worse. That's life. But anyway, I'll stop, you know, opining on pointless stuff. But what am I interested in? If this 50-day, you know, this S&P above the 50-day moving average comes down into 10, I'm going to go ahead and set an alert here at 11. And now let's say interested in looking for bottoms, indexes, and quality stocks. Okay. And I might sacrifice growth, right? Like if I invest in the boring stuff like large cap, mega cap, Mag 7, I mean, everyone's like talking about like how the Mag 7 is going to fail and it should be a big rotation out of it. And maybe it is. But it's hard to hate on stocks that make so much money every quarter and have basically a monopoly in every facet of their business. You know, I mean, like life without Apple or Amazon or Google or Microsoft is a little bit more difficult to imagine. You know, what I do on a daily basis is I sit on my computer, which is a Microsoft operating system, with my iPhone that sits in. It's like I check my iPhone all freaking day. With Amazon packages that are delivered anytime you want with the easiest convenience. You know, with Google, with searches, and YouTube, which we're running this on YouTube, and YouTube, it's like it's so a part of our life every single day that are those companies going to fail? Probably not. You know, can they be hated on a little bit because they're so big? Yeah, but is the government powerful enough to break them all up? Doubtful. It'll just drag them through the mud. You know, there's a famous saying from like this is back in like Stalin times, but it's like show me and I'll show you the crime. So look, if the government puts a target on your back, they'll drag you through the mud. Elon Musk is kind of that guy. You know, he was at least, and now it's like, well, if Trump's president, maybe Elon Musk is getting a break. So anyway, whatever. All right, let's go some other stuff. And do I have anybody coming up after 11 o'clock? I'm good. Like I'm just talking today. I'm waiting. I'm still, like I said, I'm monitoring my hedges and watching positions. Probably the easiest trade for me right here is just to watch closely to see, does the futures market end up breaking, right? I mean, look, this time of year too, there shouldn't be a ton of volume in the market, right? There shouldn't be a ton of volume in the market. So I'm not saying that the market can't go lower. It certainly can. And volatility might get a little bit nastier, but all the volume, and like I said, you know, yesterday was one of the last remaining catalysts for the year. The only thing that's left is Friday's PCE. Now, based on what the market already did, the Fed acknowledged it yesterday during Jerome Powell's press conference. We know that inflation is higher. You know, if you're paying any attention to inflation numbers, or if you've lived life for the last 4 years, things are more expensive. Okay. But all we have is a PCE reading, which is supposed to be the Fed's preferred measure of inflation. And we still don't have a forecast on it. We just know that the previous year-over-year PCE was 2.8. And what do I imagine for tomorrow? What I read from the Fed reports is it's going to be something like 2.89. Let's call it 2.9. So if tomorrow morning at 8:30, this PCE year over year, we finally have some what? We finally have some forecasts. Well, there you go. This didn't come up at all. Okay, this wasn't here at all this week. So I'm looking at the news, retail sales for Canada. Okay, this one I'm paying attention for the U.S. Yesterday, this wasn't even on the calendar. So, like I said, 2.89 was the measurement I saw from the Fed. So you can see that the core PCE year over year is projected to be 1/10 higher, which is higher than the previous, which is just along the same lines as watching PPI go higher and CPI go higher. The PCE price index year over year, 2.3, now forecast at 2.5. Okay. And again, in the fancy accounting economist world of an economic calendar, is it going to come in exactly as forecasted? Is it going to come in higher or lower? Right? So I would imagine higher is probably the trend, because we've seen it for the last 3 months, September, October, November, to now. It's like all those prints since September's data printed in October, all of it showing higher inflation, CPI and PPI and PCE all higher. So those are your forecasts for tomorrow. That's it. Like once we get through this, it's Christmas and it's New Year's and it's low volume. It's going to be an interesting market to navigate. I will be spot checking, but you know, how active am I going to be? A lot of my positions are out to 1231 or 131 for hedges. If I have chart alarms set, I've got, you know, TradingView with my membership, I've got 400 plus chart alarms I can set. Believe me, I'm setting them on levels and stocks that I'm interested in buying. And so I'll participate. If I've got a level, I'll participate. You know, I'm not traveling for the holidays. So yeah, but tomorrow's inflation news, like, is the market going to react to it? Maybe, maybe not. Maybe the biggest reaction was this week on Wednesday, and then it's just more about like how the market digests the news. But we are showing here on paper that the forecast is higher inflation. Okay. The yields have gone higher. So I don't know. It's tricky to look into to early 2025. If we did not have a sell-off yesterday and we were sitting near all-time highs by the Fed, I was thinking like Christmas, New Year's, we're going to drift to all-time highs, and this market just keeps melting up. And then we'd have like an interesting shakeout early in 2025, thinking maybe the debt ceiling is going to be the potential catalyst. But it's not. The Fed caused it, right? That's the excuse that the market's using. But believe me, there's plenty of hedges that were going on. I know a lot of funds, a lot of macro, a lot of people were hedged, right? Good investors were hedged. Buying puts was dirt freaking cheap. I know it because I've traded them. There's a reason I couldn't turn away from having at least like a 30 to 60-day hedge because it was so cheap. And yesterday was the day where it's like it looks pretty good. Even though it could have been a wasted money, it still looks pretty good to have it when you're right. Anyway, we are sitting here looking at higher inflation. The market's going to struggle, I think, to get back to all-time highs for the rest of the year. So where are we at? Where does that leave us? Well, that leaves us with potentially more pressure to the downside, maybe a bit of a holiday meltdown, which is unusual, right? Usually it's like the Santa rally, Christmas and New Year's. Look, I don't know how much buying is coming in over the next couple of days, right? And if we don't have any like major buying to the upside, I don't know how this market does anything more than either go sideways or just slowly unravel. If it gets more accelerated, let's keep an eye on it. But otherwise, with low volume and the holidays approaching, don't expect to have a lot of fireworks and crazy movement. I could see that the pressure is now in. Like, I think a lot of traders would say like the top is in. After yesterday's kind of cementing that, it's going to be very difficult for this market in 2 weeks of low volume holiday trading to somehow snap back, 3.5% to 4% to get back to these highs. So where do we go from here? Well, dynamically, if the Dow has come right back in to fill this election gap, guess where I think the SPY can go? Right there to it. So can we come back into the election gap? Yep. And that would be a 100 moving average. Can we come back deeper than that and take out the election? Yeah, maybe. We could take out that pre-election low, maybe find the 144 moving average. I'm going to start positioning a little bit more aggressively with a 144 and a 200, and obviously my structure here, which is connected to previous lows, which would be a little bit below the 200. And then everyone's going to be worried about the death cross, and typically that death cross becomes a fake out. If there's any way to keep this bull market going, and what's everyone expecting for 2025? That it should get better, right? We're going to have lower taxes. We're going to be, pro deregulation and pro capitalism and pro everything and pro blah, blah, blah. It should be okay, but that's being said, not being seen. Like, I don't know what's going to happen in 2025. It is a clean slate, and I said this yesterday during my live session. I don't know if I said this when Nick and I were on, but I ran a bonus session afterwards on my YouTube channel. And I thought, think about how interesting this could be for 2024 and 2025. We could have this market for the end of the year give us right now we're down about 4%, give or take, like 3 to 4%, right? So let's go high to low. We're probably down about 4% from the high to low. Okay, about 3.68% in the S&P. I think it's over 4% on the Qs. Now, we have room to still give back some of our gains for the year, and this market could still be 20+% on the SPY. It could be 20+% on the Qs. It could be, 15 to 20+% in gold. It could be 75 to 100+% in Bitcoin. It's still going to be down in the bond market. That's going to be like a 4-year drawdown or something in the bond market, which is like unheard of, and it rarely ever happens. But point is, like, overall investing could still be seen as, like, on paper, that's still a heck of a year, because you have to remember, the average return is 8 to 10%. So this is still crushing it for the last decade plus. This is a great year. So what I think is interesting is we could still have, 4, 6, 8, 10% corrections in these markets and still have a good finish to the year in 2024, and also even offer up a discount to start 2025. And if we have a discount to start 2025 and all the market does is just work its way, whatever it takes to get its way back up to those highs, we could have a little bit of a discount to then buffer the gains in 2025, because 2024 had all the slack to give some of it back, right? So we could have like the discount offered in 2024 into early 2025, and then the market fights back. So you still have a solid 2024 with the ability to deploy some capital to have a positive 2025. That already, it's pretty optimistic. I think that's a good thing to look forward to as a trader next year. If we're getting a discount, great. You can get stuff cheaper. That makes sense? So I don't think this is all lost. It's like, oh my gosh, what do we do? It's just going to get worse. It's like everyone thinks it's going to get worse. Everyone thinks this market's going to die and it's going to zero. And like the sentiment swings are so insane to me. And that's why I was getting really, really toppy. Like I was questioning like how much higher this market can melt up because like everything is so pinned one way. And so, yeah, there's your reality check. It happened. Now what's left? Maybe some more downside. Cool. Well, we still have the ability to hang on to gains for 2024. And then we have the ability to buy some really good discount levels. And even if the market goes from low to high and low to high, in 2025 is a grinding year, but it establishes some type of structure. Maybe a broadening pattern would be a little trickier to trade, but it could be a trader's year in 2025 and we'll figure it out. Okay. So point is, pay attention. There's going to be stuff to trade. There's going to be opportunities. I would say just a word of caution. If you are leveraged on anything, like you're leveraged ETFs, you're speculating on garbage and penny stocks, you're, having these huge drawdowns and you're sitting and hoping and praying that things come back. Well, good luck. I just had somebody send me a screenshot yesterday, $50,000 account. $8,000 was the result after yesterday's trading. $50,000 account was sitting at a balance of $8,000 after yesterday's trading. Like, how irresponsible is that as risk management? Like, that is tossing in, it's all on the line. Like, you might as well go to the casino and put it all on black. It's like, that's terrible. It's not trading. That's gambling. That's straight up gambling. So I'm just saying, don't be that trader. It's not that hard to practice some discipline and patience and risk management. And what you have to give up is you got to give up the allure and the dream of your, $1 million overnight. You got to give up the FOMO of like, why can't I make $100,000 in a day because I went all in on a call option? It's like, give that shit up and focus on good quality trades and you'll survive and you'll be fine. Okay. All right. That being said, my one swear word of the day, I'll let you go. All right. Thanks. We'll see you soon.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.